autos in particular, and that may be an area where there is some scope for a deal. So it's hard to say, but I also think there's a real question on President Trump's side is how open is he to a deal? And I think maybe with China, less open just given what happened under Trump.
It's a good point on autos. Angela Merkel would say that Trump used to always say to her, why don't I see any Fords here? While I'm in New York City, I see Mercedes all over the place. You have these 5 Ds of Trump 2.0, deglobalization, deficit finance, tax cuts, DOGE, deregulation, deportation. Which out of these is getting your clients the most concerned?
Well, I think it depends on actually where they're located. A lot of our clients, I think, overseas are very focused on some of the risks to the economic forecast, particularly as it relates to tariffs, potentially the detrimental impacts of immigration on growth. I think some of our domestic clients more do see this as a mixed bag. And again, I think the open question about our 5D framework is really the sequencing of course, the scope of those policies, but also the sequencing. Do they lead with draconian tariffs and big actions on immigration, or is that more of a phasing in and you get some of the tailwinds from the increased tax cuts and deregulation and what have you? So again, many more questions, I should say, than answers at this point. But a lot of this will depend again on scope and sequencing.
Just going back to the 5 Ds, and Happy New Year, welcome back, Libby. But I do look at these, and I do think that
statute of limitation.
This idea of
why do I feel like that was to troll me?
No, not at all. Well,
you and Larry David, you're not bad company.
Let's move on. So deficit finance tax cuts. I think you still can say Happy New Year. It's the new year. I haven't seen Libby. I'm always happy to see Libby. Deficit finance tax cuts and DOGE. Do they offset one another? Or is the deficit financing really the main piece that everyone keeps honing in on?
Yeah, I mean, I think this is something obviously that the market is trying to digest right now. Is that, how much of this will actually be paid for? And look, I think the DOGE effort is real, right? I mean, this is to Elon Musk and Vivek Ramaswamy's credit. I mean, they really are trying to kind of penetrate some of even the nomination process in terms of inculcating them with this sort of DOGE ethos of increasing efficiencies and potentially cutting spending. I do think there is a natural limit to what they can get done, though, and this is just a question of how slim these majorities are in Congress. The House majority on the Republican side, and I've said this to you all again and again, but I do think this is worth repeating, is that for several months this year, it's going to be a 0-vote majority because you're going to have 3 vacancies on the Republican side, and that means that Republicans can lose no votes and still pass things. Now, even when they're fully staffed, fully seated, they're only going to be able to lose 2 votes. And so this is where it really is a question of it's easier to eat dessert than vegetables. It's easier to cut taxes than it is to actually cut spending, because when you're cutting spending, you are actually practically impacting constituents in these House districts. So I do think, kind of a long way of saying, my view probably will be, some of it will be paid for, but it will be an impact on the deficit.
How many representatives look at the 10-year bond yield before they go in for negotiations?
I don't think very many, with all due respect to the members of Congress. If they're not, unless they're on the committee of jurisdiction, these folks are, they're small business people, they're farmers, they're state legislators. I mean, these are so smart people and sophisticated in their own right, but they're not necessarily market participants. And so, is the 10-year capturing the attention of folks who are on those committees of jurisdiction? Probably, but outside of that, I'm not sure what the reaction function from between the market and between Washington is. I think much more so is when they hear from their constituents that mortgage rates are higher, that they can't get a loan, that they can't get out of their house. I think that is much more kind of apt to actually influence members than what the 10-year is.
It's hard to tell constituents that rates are lower at the Federal Reserve, but mortgage rates are higher. Mm-hmm. It's hard to explain that.
It's hard to explain all of this, and it's harder to explain that I'm going to cut your benefits and I'm going to cut costs here by not putting as many lights in or utilities that are going to get upgraded because your mortgage rates are high. How do you explain that to people?
Bond yield to higher again this morning, up by a single basis point, and that post bump off the back of our story, that post-story bump, has faded. Equity futures right now positive by only 0.2%. Libby, it's good to see you.
Good to see you. Happy New Year.
Happy New Year. Libby Cantrell, PIMCO, forcing it out of me. Up next on the program, Armin Paprika of Rheinmetall on the outlook for Ukraine as President-elect Donald Trump takes office. An important conversation just around the corner. As I say, the bump in futures fading just a little bit. Likewise, the story of the US dollar. That was a whole lot weaker earlier on in the session. Euro dollar just about unchanged at 102.50.
countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers.
Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
The bump in equity futures fading just a touch, still positive, but up by 0.25% on the S&P 500. On the Nasdaq 100, we're higher by, let's call it 1/3 of 1%. With some morning moves this morning, let's cross over to Manus Cranny. Good morning, Manus.
Jonathan, good morning. We know Elon Musk is taking a great deal of the oxygen out of the technology realm between the possibility of a TikTok deal, but back to basics, which is Tesla, the stock up at 1.5% this morning. Morgan Stanley, a lot being written out there. They are justifying the bull case. The bull case in an extreme scenario could be $800 for them. They say the advancements in autonomous vehicles, that's what the market is really beginning to appreciate. The leadership that they have, not just in the vehicles, but in the AI, the data collection. Data collection, TikTok, X, Tesla, there's a narrative there. It's about data collection and power of what you do with that. Robotics, along with energy storage. So it's about a reappreciation of what actually is in there in terms of the size and the scale of mobility, 7.5 million vehicles in 10 years' time. If you want to understand the boom in the housing market, mortgage rates might be at 7%. It's hard to lock in a deal. Look at this, KB Homes. This is a representation of the bull case for housing despite mortgage rates being at 7%. Revenue $2 billion, new orders up 41%. Buyers continue to demonstrate a desire for home ownership and the housing market conditions. So despite the rates price, it's in our blood that we want to be home ownership. We want to be involved in home ownership. I round it off with a deal. Again, the deal, it's not so much the size of the company of H&E. Look at this, up 107%. You've got United Rentals going after this company. They're prepared to pay $3.4 billion in cash. It's the story. It's like a home builder story. This is about renting for industrial and construction business in the United States of America. This is a trade on growth. This is a trade on U.S. growth, exceptionalism and divergence. That's what you walk away from in terms of the housing report, in terms of this particular deal. There's a number of narratives to tie together. Jonathan.
Manus, thank you. Solid numbers coming from KB Home. Really impressive. Big move from that stock this morning. Out of surveillance this morning, Donald Trump and Joe Biden both optimistic that a ceasefire deal between Israel and Hamas could be coming within days. Trump saying, quote, maybe by the end of the week. Biden saying both sides are on the brink of a proposal. To go to our next story, Cleveland-Cliffs and Nucor are weighing a potential joint bid for U.S. Steel. Sources telling us here at Bloomberg that deal would involve Cleveland-Cliffs acquiring most of the firm, while Nucor taking its so-called mini-mill assets. Lisa, another entrant into this saga.
Did you see what the commentary was from the Cleveland-Cliffs CEO, where he said that basically Japan was evil and explained that his plan was to be an all-American one? And then you had, of course, Nippon Steel come back and say, look, we're going to keep it together and invest a lot more. So, you know, watch this space.
Yeah, this drama's not over. How many times have we said that over the past few months?
And we'll keep doing it.
This drama's not over. NVIDIA CEO Jensen Huang is slated to arrive in China tomorrow as employees celebrate Lunar New Year. His visit coming at a tense time as both US and Chinese officials scrutinize the chip giant, the White House unveiling new curbs on NVIDIA exports, and Beijing investigating antitrust allegations.
Really interesting time because, of course, Beijing is looking into NVIDIA and they have a probe on the company, but when you talk about what the White House just did in terms of that tier approach on AI chips, NVIDIA blasted the Biden administration. He's going to China now to probably talk about some of these new curbs and that probe. What's interesting is he's going to China at the same time we get Trump coming in. And a lot of these executives, I'm sure, were invited to attend that administration, but he's going to go do some external diplomacy.
That stock is up this morning. It comes at a time, Lisa, and you talked about this earlier, where some weakness has started to creep into that name and some other big ones too.
That name is down almost 11% in the past 7 days. That is pretty shocking. And you're looking at a time when there's some questions around delays to certain chips, and then some companies actually ratcheting back some of their orders from NVIDIA, and they are caught hamstrung between the tit for tat between the U.S. and China. So, yeah, this is going to be an interesting name since it's led a lot of the growth in the S&P.
Three of the stories on our radar this morning. NVIDIA higher by 1% in the pre-market. Let's turn to the Russia-Ukraine war. President-elect Donald Trump continuing his push to increase defense spending. The German Chancellor Olaf Scholz rejecting Trump's demands that NATO allies increase defense spending to 5% from 2% of GDP. Joining us now, Armin Papiga, CEO of Rheinmetall, a German defense and engineering group. Armin, good morning. It's good to see you in New York.
Good morning.
Got to start with a very serious topic, and from there the topics get even more serious. But let's start with you first of all, sir, personally. According to multiple US and Western officials, the Russian government planned to assassinate you. This has been in the news over a number of months now. Can we start with that and talk to you about how things are going personally? When were you told about that, and by who?
It's about 1 year ago, and the information we've got from the US, from FBI, and I'm very happy about that, that they very early gave us that information. German government took that information, and the protection level now is very high. I have the same protection level than the Chancellor.
Wow, you have the same security protections as the Chancellor, Olaf Scholz. Yeah. And do you feel secure?
I feel secure.
Is there a reason why you wanted to stay in the job, even though that threat was hanging over you?
I love that job. We have to work. We have to work for freedom, and we have to work for democracy, and nobody can stop us,
including Russia. Let's talk about the challenge that comes from Russia now, and the push from the incoming president to push defense spending, perhaps as high as 5% as GDP. And we know it's been a struggle for many NATO members to get to 2% over the last number of years. Do you think that's doable, to get to 5% of GDP?
I think 5%, it's a big value, 5%. And I believe that if we first of all get to 3%, it would be great, because over the last 25 years, the Europeans did not invest enough money in security. I understand 100% President Trump. He's right, that Europe has to spend more into the Western security, and we have to do it.
Well, my reporting over the summer was actually they were looking at 3%. So potentially this falls down to anywhere from 3 to 5. Germany, though, is only spending 2%. Do you think they can spend more on defense?
I think they can, and I think they have to do, because at the end of the day, Germany is the biggest economic in Europe, and they have to help to make Europe safe.
We just heard from Mark Rutte last month talking about it's time for Europe to shift to a wartime mindset. For decades, Europe decided to curb their defense spending and really outsource their defense to the United States. That failed, obviously, when Russia invaded Ukraine. Do you think Europe is still unprepared for the war that's on their doorstep?
We prepare ourselves. And if you see what we do in Rheinmetall is we invested over the last 2 years more than 7 billion to build up the capacities. And that's very important. And in between, I am able to produce 1.1 million artillery rounds, which is more than the US is doing at the moment. So I think we prepare ourselves, but we have to do more.
You also have production facilities inside Ukraine.
Yes.
How quickly will we be able to get ammunition production going inside the country?
In 12 months' time.
In 12 months' time?
Yes, yes.
There is potential that in 12 months' time, according to President-elect, this war could be over. Do you foresee a scenario where Putin will agree to some sort of ceasefire in Ukraine?
Nobody knows that, and as you know, President Trump said he's able to do it very fast. We will see if that really will happen. But even if that will happen, we need a lot more defense goods, because at the moment, as you know, the stocks are empty, especially for ammunition. But although the tanks, we have not enough tanks, we cannot protect ourselves.
What about the incoming administration in terms of communication? You are really the massive player in Europe, almost the only game in town when it comes to the European defense industrial complex. Are you talking to the incoming Trump administration?
We start talk to that, and I will talk very, very early with the Trump administration because we have to do it. And the reason is that I also have a lot of investments here in the US. And I invested some months ago more than $1 billion also to buy a company here because I believe in the transatlantic relationship.
Do you think that you can partner with this incoming administration? And how was the communication and partnership with the Biden administration?
It was good, but at the end of the day, we as a company, we must be politically, let me say, a little bit independent. And we have to work with all governments. And that's very important. And I believe that we really can work with the Trump administration because I believe that he is right. And the pressure that he is creating at the moment is good for Europe.
He's right with respect to spending more on defense. But is he right about the U.S. retracting some of its spending on Ukraine and really leaving it to the European Union to finance the efforts there?
I believe that we have to help Ukraine. If Ukraine will fall, we will have a big problem in Europe. If we have a big problem in Europe, because I believe that Putin will not stop with the Ukrainian border. So what about the Baltics? What about Georgia? What about Moldavia and all the other things? And I believe that it will be very, very helpful if the US and Europe is working together in this area. And at the moment, Europe needs US because the resources are not good enough in Europe.
Do you think there is a political will in Europe to offset any decrease in financing from the United States at a time of political turmoil where there's even upset in leadership in Germany and real questions around how much the public wants to keep financing this?
I believe that the new government in Germany, and as you know, we have election in 7-8 weeks, that the new government will create a very strong contact to the Trump administration. And I believe that they want to work out a good plan and to make a deal together. Europe and the US has to make a deal for security.
You talked about how you're investing in the United States, and I'm wondering how important it is to get a foothold in the U.S. to get around any potential tariffs or other types of issues that come down the pike.
Very important, very important. I understand all the issues that the U.S. has, and I said, okay, we want to make money, and President Trump wants to make deals, and he's right about that, and we have to take care about that. That's the reason that we are investing also in the U.S.
Are you also ratcheting back certain businesses in Europe that you think are going to be more exposed?
We grow at the moment 40% per year, so we can grow in Europe, and we have to grow in the U.S.
The president wants to make deals. Do you want to make deals? Do you think we need some consolidation in European defense?
Yes, I think it's possible, and I think it's important to do it. As I always said, Europe needs also a bigger machine in defense. And what I believe is we need a company which makes 40 billion per year. We are at the moment only on the level of 10 billion, but we will grow over the next years to 20 billion, maybe more. And the backlog is a very good one, so I believe that consolidation is very important.
You can grow organically to 20?
Yes.
Acquisitions, have you got any in mind?
Yes, we have a lot in mind because, as you said, over the last 2 years we bought the lock performance here in the U.S. and the Spanish company.
Yeah.
We invested 2.2 billion in that, and we want to invest more, and we have more firepower.
Have you spoken to BAE?
We always speak with BAE, but
You've spoken to them about a possible acquisition?
No, we didn't speak about to merge or other things.
Would you be open to that?
At the moment, there is no discussion.
But would you be open to it? Would it make sense?
I'm always open if it makes sense.
And does it make sense?
I'm not sure, but we have to analyze that.
I want to go back to how John really started this topic. The fact that your life was put at risk. You're basically on a Russian hit list, but it goes beyond that. Dmitry Peskov last year said your company is, quote, a legitimate target. How, as a company, are you responding to Russia's hybrid warfare on the continent?
First of all, we have a very, very good cyber center. That's the most important thing, that cyber attacks will not come in. And the second point is we are not in war at the moment. I have not air defense and missiles around my factories. But if there is a higher potential that something will grow up, then we will have to do that, for sure. We will protect our factories, and we have to do it.
Right. And you feel like the German government is a partner with you in this?
Absolutely. Absolutely. We are absolutely fighting shoulder on shoulder.
And when it comes to this assassination attempt on your life, do you believe it came from Vladimir Putin himself?
I don't know. I don't know, and at the end of the day, the information, as I told you, came from secret services, and we have to take care about that, and the government in Germany takes care about that. Not only the German government, also governments, if I travel to other countries, also that governments take care about that. I'm very grateful about that.
You've been very gracious with your time, sir, and we appreciate it this morning. Thank you very much.
Thank you.
Thank you. Armin Paprika there, the Rheinmetall CEO. That stock has been on absolute fire over the last several years, that's for sure. And particularly after, again, we got another bump in early November following the election of President Donald Trump. With an update on stories elsewhere this morning, here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. A new wildfire broke out last night in California's Ventura County and rapidly grew to cover more than 50 acres. The fire started shortly after the National Weather Service warns that portions of Los Angeles and Ventura counties will face a particularly dangerous situation this week. At least 24 people have been killed and 12,000 buildings have been destroyed. The SEC has fined a number of Wall Street's top investment firms for failing to track their employees' business communications. Firms including Blackstone, KKR, Apollo, and Charles Schwab will have to pay over $63 million for not monitoring and archiving employee text messages for business purposes. Investment advisor broker-dealers admitted to the violations and vowed to improve compliance. The settlements are part of the SEC's ongoing crackdown on the use of unauthorized messaging apps. Two Chinese social media apps, Xiaohongshu and Lemon 8, have taken over the top 2 positions on Apple's iPhone download charts in the U.S. The rise of these popular Chinese apps is seen as a response to the impending ban on TikTok in the U.S. Many users seeking out alternative social media platforms. A string of new English language content and users showed up on Xiaohongshu this week. The hashtag TikTok refugee has garnered more than 44 million views. And that's your brief, John.
Danny, thank you. Appreciate it. Up next on the program, the cost of rebuilding in California.
Get the permit and do it in a way that we've done it with the experience at hand in other communities that have been similarly ravaged by wildfires. The scale of this is going to require us to be better and do better.
That conversation up next. Live from New York, you're watching Bloomberg TV.
You've released, I think, a Bollywood song, a reggae album, a gospel album. You've done a bunch of different genres. Is there any genre you haven't tried that is, because it feels like this next one you're doing is sort of back in your sweet spot.
I did a jazz album that I haven't released yet. It's more or less like spoken word over jazz music. That was a genre that I've always wanted to go into. Quincy Jones hit me to Mr. Mumbles, Clark Terry, which was his teacher. And we had an opportunity to spend time with Mr. Terry, and we did a record together, and that was a genre that I always wanted to venture into because I felt like I had a jazz voice.
So your role in a jazz album is just your singing?
No, I'm spoken word.
Or spoken, sorry.
My voice, my conversation, my poetry, you know.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Equities just about hanging in there, positive by 1/3% on the S&P 500. Bond yields just bleeding a little bit higher, up a single basis point. The 10-year 478.83 in about 41 minutes' time. PPI data in America, the appetizer for the big one tomorrow. The main course, CPI, tomorrow morning at 8:30 Eastern Time. And the Savannah's this morning, the cost of rebuilding in California.
Time value to construction. Get the permits. State, deal with all of those, create a specific timeline, making it up. We're working on the exact date, so don't hold me to it. 120 days. Get the permit. And do it in a way that we've done it with the experience at hand in other communities that have been similarly ravaged by wildfires. We know how to do this. We've done it in the past. We learn, we iterate, but the scale of this is going to require us to be better and do better.
So here's the latest this morning. Southern California facing another round of dangerous fire weather. At least 24 people are dead. 12,000 buildings have been destroyed in fires that have been burning for more than a week. Wells Fargo, Goldman Sachs, both estimating insured losses could be as much as $30 billion. Villa Home CEO Sean Roberts writing, construction activity through the rebuild will drive construction costs up throughout Southern California in an already labor-constrained and expensive market for building. Sean joins us now for more. Sean, thanks for giving us some time this morning. We appreciate it, sir. Can you just walk us through and just build on what you've already said, how difficult this rebuild effort will be?
For sure. Well, first and foremost, my heart goes out to everyone that's been impacted. And thank you to all the firefighters and first responders that have been handling this. We're going to see a lot of changes in the Los Angeles real estate market. Like, rents are already going up, home prices are likely to increase, insurance costs are going to go up. And as it relates to the rebuild, this is a tremendous amount of construction activity that's going to be happening in the market over the coming months and years in an already very expensive and trade-constrained market where it's hard to build. And a lot of the things that Governor Newsom was talking about in the clip that you rolled are really important. One of the things that's concerning us quite a bit is the pace of permitting. And we're glad to see the authorities getting ahead of that now, but the devil's going to be in the details around how much actually changes on the ground with how permits are processed and approved. That's really going to be one of the key bottlenecks for getting the rebuild velocity up to a pace that can actually impact the market here in the near term.
Sean, Governor Newsom has talked about cutting red tape. Could you give us some details on that? Give us some real color. How difficult is it to process the permitting? How long does it typically take?
It can take a while in Los Angeles. It can be many months, and you can go through many different permit comment cycles and get lots of feedback and edits, and there's a lot of red tape. I think some of the things in the executive order that came out recently around suspending CEQA, expediting permitting, preventing price gouging, those are all good and they're in the right direction. But again, the devil's in the details, and we can wave a magic wand on policy as much as we want, but what really matters is how many people are in the permit office actually processing permits. The implementation of these policies is going to be where the rubber hits the road. And we're hoping that a lot more staffing is put into the permitting office.
Sean, I'm just curious if you could give us a sense of how long it would take if we didn't have a permitting process, how long it would take to build a home or versus how long it can take given some of the permitting that had been in place.
Yeah, again, it depends on what you're building and how you're building it. One of the things that we're excited by is the potential for offsite construction to help rebuild faster in the impacted areas. And you can put an offsite home in the ground much faster than stick building it. which is how we build here at Villa. So the actual construction timelines can be a lot faster if we deploy offsite construction. And a lot of offsite construction can be pre-permitted in a lot of ways. So that may be an important tool to deploy here to be able to rebuild quickly, using offsite construction with faster permitting and pre-approved plans potentially.
Sean, how much is insurance going to become a sticking point? The idea that insurance costs already were high, they're only going to go higher on the heels of this, and there's a real question about who is going to remain in California.
It's a big issue. It was a big issue before the fires, and it's going to be an even bigger issue going forward. The structure of how the home insurance market in California likely needs to be rethought, and insurance companies need to be able to actually charge premiums that are commensurate with the risk profile in the market, which ultimately means insurance costs are going up. And that raises the cost of housing across the board, whether it's ownership or rentals. Homeowners insurance increases are going to drive the cost up for everybody across the board. And that probably goes up beyond California as well, because the entire market sort of resets to compensate for that risk. So insurance is a real issue here.
Sean, how many calls have you gotten already?
Quite a few. There's a lot of folks in the area looking to rebuild quickly, and given our focus at Villa on using offsite construction to build smaller homes quickly, especially ADUs, we've seen a lot of interest from various clients looking to find ways to rebuild quickly. And we're trying to do everything we can to help. And this is a full court press with our team to find ways to be able to be helpful and get housing back in as quickly as possible. That being said, it's still early. The fires are still going. The fires are still spreading. The winds are picking up today. So it's going to be a while before we actually get to the rebuilding effort, but we're seeing a lot of client demand coming in already.
Sean, there's already a rebuild effort taking place in the southeast. The hurricanes just destroyed houses across several states. Have you already found it difficult to source materials given the rebuild effort taking place elsewhere even before this took place?
Not really. The building products market is more stable than it was during COVID, for example. So sourcing materials has actually not been a big challenge to us yet. We primarily build on the West Coast, so what's happening in the Southeast is pretty far away in terms of the raw material input market. That being said, I think we're going to see some big changes for the cost of both materials and labor in Southern California coming up.
Interesting. Sean, appreciate your time and your perspective, sir. Real experience there. The Villa Home CEO, Sean Roberts, on the latest. A labor-constrained and very expensive market there to rebuild into.
And what you raised, which is the idea that Governor Newsom has talked about potentially pulling back some of the permitting process and removing some of the environmental constraints to expedite possible building. Devil will be in the details. Also a question of how do you create fire-resistant materials to prevent this from happening again?
Well, Sean talked about the changes we might see, and that might be one dimension of those changes. Coming up on the program, we'll catch up with Venu Krishna of Barclays, Chris Caso of Wolfe Research, Sonia Meskin of UBS, Tom Tsouras of Strategas. The third hour of Bloomberg Surveillance up next, live from New York City. Good morning.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turns a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs. because we're growing our revenue so much, we want to grow our revenue into our existing cost structure. And there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions, has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
In case you missed it, on Bloomberg Open Interest.
11 years ago, I bought a Bitcoin on this set.
It was $800.
Yeah, $800, but I spent
Which
the
is a
Bitcoin
lot, by the
on
way.
beer and groceries and gas and video games.
And
I wish I had
hugs.
kept it. I wish I would buy a Harley today if I had.
Yeah, but you
that
probably wouldn't
Bitcoin.
be a TV anchor, and you probably wouldn't still be on this
True.
set. And what a joy that
I'd
is.
be my feet in the sand and a beer in my hand.
Don't miss the next Open Interest.
It's going to be a volatile year, and there's going to be a lot of uncertainty there.
All of that policy change is out there for us to sort of take and accept, but I do think it's out there and it is positive in terms of where it's heading.
We don't see inflation accelerating from here like other people. Inflation is going to be demand-driven. I just don't see enough demand.
More towards the cautious side, not the optimistic side.
There are a lot of things out there that I think are going to be adding to volatility, but I don't think that we're headed for a deep correction or a new bear market.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
A massive focus on inflation, and it starts this hour. PPI data 30 minutes away tomorrow morning, about 24 hours away, 8:30 Eastern Time. CPI. Then you start to ask the question, how are consumers, how are businesses handling all of this? You'll get some banks reporting on that. JP Morgan, Citi, Wells Fargo, and Goldman Sachs all reporting tomorrow morning. Going into it all, equity futures at the moment fading a touch. We're positive by 0.2% on the S&P 500. We did see a little bit of dollar weakness, not seeing much now. Lisa, euro dollar 102.49.
Really, with a non-farm payrolls report on Friday, set up how big of a potential move there could be tomorrow when we get CPI, but even today with PPI, how much this market is on a knife's edge when it comes to a potential inflation surprise that once again gives a sense that maybe not only are rates not restrictive, but they could keep climbing from here with the Fed in a position to be on hold for the remainder of 2025.
A key nugget in Jenny Leonard's Leah Mosin's story about this gradual approach to tariffs is the fact that they want to make sure they can avoid a spike in inflation. Remember, Donald Trump ran on this agenda that he could be the one to bring prices down, whether it's the grocery store, the gasoline, or shopping, everyday goods. That might be a concern that all of that blustering about big tariffs that we heard from other members of his cabinet, soon-to-be cabinet, that actually inflation might be a North Star for this incoming administration.
Stuart Kaiser of Citi talked about how it felt in November. You could bathe in the hopes and dreams of the incoming administration being incredibly pro-growth. Now you have to confront real event risk over the next week. Inauguration on Monday, and then you start to think about policies, sequencing, emphasis, and hopes, again, that inflation truly is the North Star, because if it is, great. And if this is the approach that we're reporting overnight here at Bloomberg, that we'll take this incremental step-by-step phase, 2% tariffs here, 2% tariffs there, use them as a negotiation tactic, That's very pro-risk, very pro-risk. But will we get something different?
We might also be bathing in the hopes and dreams of Scott Bessent ruling the day at a time when he still has to be confirmed by Congress. This week is event risk in itself. And I think some of those nominations that we have coming before Congress are going to be really illuminating in terms of just how much permissiveness there is enough among Republicans to move forward with certain proposals of the Trump campaign versus others. Look, event risk is a hard thing to price. The headline risk is an even harder thing to price. It is all excruciating difficult when you don't even know where you're coming from because people disagree even on the state of the economy as we are right now.
And he's not in the Oval Office yet. He's got to wait a week.
Correct.
It's going to kick off big time next week when we start to see those executive orders.
Yeah, that's why I'm going to take a few days off.
Equity futures on the S&P. You enjoy the slopes. Positive here by 0.2% on the S&P 500. In the bond market, just about unchanged. Coming up this hour, we'll catch up with Venu Krishna of Barclays with stocks moving higher on reports of a gradual tariff rollout. Chris Caso of Wolf Research as NVIDIA gets caught up in US-China tensions. And Sonia Meskin of UBS reacting to PPI data. We begin this hour with stocks just a little bit higher. Investors reacting to a Bloomberg report that Trump's economic team is looking at ramping up tariffs month by month, aiming to avoid a spike in inflation and helping perhaps to put a lid on bond yields. Venu Krishna of Barclays writing, yields have now entered the danger zone for equity markets, and we are seeing market internals reflect this. Venu joins us now for more. Venu, it's good to see you. Thanks for catching up with us.
Good morning.
If we are in the so-called danger zone, how self-limiting is this move in the bond market?
I think this is a critical phase. I think once we breach the 4.5% rate range, you have to be really concerned. And the principal channel it flows through is multiples. And equity valuation multiples, as we know, have been quite full. Not necessarily rich, but quite full, right? And so the rates risk where the negative correlation between equity and rate kicks in, we are in that territory now.
Why did that correlation change over the past month? In early November, yields were up and stocks rallied. People felt good. Price in a positive growth shot. All good news. What changed?
So there is a sweet spot at a zone in which growth is decent, inflation is reasonably contained, and the market is comfortable with a vigilant Fed. But once you breach a certain point, the concerns start moving towards inflation, deficits, and the likely impact eventually rolling into economic growth as well. So I think it is that changing scenario. So we've been in that zone of less than 4.5 in the 3 3/4 to 4.5 range for quite some time. And that's the sweet spot. But at some point it starts changing, and I think that's where we are right now. It can move back and forth, as we've talked before, that the rates market has been moving around a lot. And so, if we go towards the 5 range, we have a problem.
If we are in this danger zone, and it is a story of multiples, why isn't it that big tech would be the most vulnerable, since multiples there seem to be the highest?
In fact, big tech is the most vulnerable. The only difference over there is that they had a peak multiple of in the 34 range last year. We entered the year at around 30 times. And so once you start seeing rates go up, anything which is high multiple will get impacted, and that will be big tech as well. The problem is that big tech has been the fulcrum of this market. And when big tech multiples correct, correlations tend to increase with the rest of the market. So it's not as if the rest of S&P is also immune to those multiple changes. Perhaps the correction multiples will be a tad lower, but they're also quite full. So I think it starts with big tech. It gets worse with small caps. It spills into the rest of the market. And multiples alone can cause a 15-20% move in equity markets. And we have seen this before.
But you're still optimistic on the year. You don't see the market going down 15 to 20% in 2025, correct?
Yeah, our full year estimate, we have S&P at 6,600. And that assumes that economic growth moderates, but still comes to a very decent level. And that assumes that rates don't take off. That is one of the principal risks we highlight. Outside of policy risk, rate risk is something we've been talking about on and off for quite some time, citing that empirical evidence of when the trigger starts getting hit.
And this is sort of the ultimate question, and sort of to go where John was beginning, this idea that if you start to see a sell-off in equity markets, people will pile into the bond market, and that'll actually help things. Do you think that actually the nature of this could be different depending on the policy mix coming out of Washington, D.C.? What are you looking at in particular to really inform the sequencing there?
I think what we're really looking for is how the playoff between the two very opposing policy stances are going to actually get implemented. So one hand, you have the pro-growth side of lower taxes and deregulation, squared off against the impact of tighter immigration policies, on the other hand. So when you have, these sort of competing factors, what you want to know is what's the sequencing? How serious are they in implementing it? What is the magnitude of change they're going to have? The pro-growth policy, even deregulation, how is it exactly going to affect different sectors, different stocks going forward? So I think it is these elements, when the new administration comes in, and clearly as we're coming closer to it, it gets more magnified. So far, surprisingly, in the last, let's say, 2 to 3 months, the market has been overwhelmingly focused only on the positive aspects of the pro-growth side. Now we're waking up to the reality that things can be different, right? And that you could be living with, like we have been on the view that inflation is stickier. So we will have to stay in the longer for higher sort of rates environment, and that has to reset expectations in the market.
But how much of those good potential policies, pro-growth, we could see from the incoming Trump administration actually changed your view after the election? Because you upgraded your 2025 price target on the S&P 500 after Trump won.
Yeah, so because our view overall over there was that the macro positives still on the margin were outweighing the negatives of the policy risks, right? And so, which starts with the two pillars of economic growth in the US. One is the strength of consumption. Second is the US tech exceptionalism. So both of them in aggregate are still in place. So unless you see a significant crack in that, it's difficult. And mind you, from a fundamental standpoint, we actually see earnings growth accelerating this year, despite all this policy noise, right? So I think the principal channel to be concerned about is more multiples and less so on earnings growth itself, which probably lands in the 12% range this year.
You're upgrading healthcare, but you're negative on commodities.
Yeah.
Why so, especially when we see oil prices rising?
Well, oil prices rising is a very short-term phenomenon. In fact, the bigger story of oil is excess supply and the fact that oil has not indeed reacted to all the geopolitical risks out there. So I think on a day-by-day basis, maybe in the last 2 days it's gone up. The big story is that oil has not been that reactive. And I think that will remain the same. And in terms of talking about negative stuff, in fact, we are negative on staples. These are areas in which you are having waning pricing power, and you have problems on margins and volumes as well. Yeah.
Wednesday, we're going to start with the earnings season tomorrow. JP Morgan is going to kick off, even though we got Delta earnings on Friday. But I do wonder how much you're expecting to learn about earnings season ahead tomorrow with the kickoff at a time when there's a lot of good news priced into the bank stocks.
Yeah, I think with bank stocks, the problem is that multiples are already well in the close to 100 percentile on a 10-year basis. So I think the market is more than factoring in a pickup in earnings growth. So what really matters now in financials is, are we going to get guidance which is going to cause the consensus earnings number to move up? If not, we have a problem, right? Even in financials. And that's why, if you recollect, one of the things we did, we actually were neutral on financials because it's played out. And now it's a show me on the pure fundamental, which is the earnings growth. Multiples are there. We are pricing it all in.
I remember you said this at the end of last year. We talked about it at a time when a lot of the street, most of the street, that was their favorite sector coming into the S&P 500 coming into 2025.
We've seen this story before, that the higher the bar, the more that anything that's even in line gets punished. And so that's sort of a question here. How do you outperform at a time when everybody is optimistic about you? It's sort of a stressful situation when you're a kid and people think you're going to do well, and then do you really rise to the occasion?
Ramo, live TV, not therapy. You can do this later if you want.
Okay.
Have a long conversation, all right? Deep breath. You know the breathing exercises we talked about?
All right, let's move on.
Appreciate it. Got it, Christian Barclays. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Let's get over to Danny Berger. Hey, Danny.
Hey, John. Property owners in LA's Pacific Palisades neighborhood are suing the city's Department of Water and Power for not providing enough water to fight the massive wildfires. The plaintiffs claim that a drained reservoir and inadequate water pressure and fire hydrants hindered firefighter efforts, allowing the fire to spread out of control. The fire has damaged or destroyed thousands of structures. The lawsuit alleging that the department's negligence turned homeowners to homeless in a matter of hours. Southwest Airlines is pausing corporate hiring and promotions in order to cut costs. According to a staff memo, the company is also suspending most of its summer internships and some employee team-building events that date back to the 1980s. The cost-cutting measures come months after Elliott Management took a stake in Southwest and demanded broad changes, leading to a restructuring of the board. And in sports, the LA Rams defeated the Minnesota Vikings in the final wild card matchup of the playoffs. The Rams jumped out to a 10-0 lead in the first quarter and kept the Vikings at arm's length, with Matthew Stafford throwing for a pair of touchdowns. The Vikings now become the first 14-win team in history to lose the wild card. The game was played at the Arizona Cardinals' home stadium after being moved because of the ongoing fires in Los Angeles. And that's your brief. John.
Danny, thank you. More from Danny again in about 30 minutes. Up next on the programme, we'll get you some morning calls. Plus, we'll catch up with Chris Caso of Wolf Research on NVIDIA and the recent battle weakness that stock has gone through. From New York, this is Bloomberg.
Is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Opening bout just around the corner, a little more than 1 hour away, 1 hour and 14 minutes. Equity futures negative by, or rather positive by 0.1%. But coming off session highs, well off session highs actually. We were much more positive than this a couple of hours ago. Talk about the why in just a moment. Bond yields are higher by a single basis point, 478.83. And in foreign exchange, the euro is doing nicely, and that move's faded as well. Euro dollars at 102.53 were positive by 0.1%. Had this encouraging report coming from the team at Bloomberg that Trump's economic team was considering taking a step-by-step approach to tariffs, maybe 2% here, 5% there. Faded that story pretty quickly this morning, haven't we?
I have to wonder how much it's overseas traders reading these headlines and saying, oh my goodness, yes, pressing the button, and then the U.S. rolls in. Like, okay, here we go again. Yeah, exactly. The headline, tit for tat. Hold on a second. We have a couple more days till the inauguration.
The president hasn't seen it. He's not signed off on anything. That was true of the Washington Post report, true of the CNN report, and true of our reporting. We put it in the piece overnight.
So it becomes a really interesting moment where if headline risk becomes something that people fade every time it comes out, how do we know that people are taking certain risks seriously? And that's something that we've heard time and again on this show. Are people taking certain risks seriously at the same time that they have to learn to tune out some of the tit for tat that we're hearing in some competing headlines?
I think a key theme you guys both just talked about is the fact that he is just the president-elect. He's not going to make any decision until he's in the Oval Office. And this reporting is accurate. but it's only from one part of the cabinet that Terry Haynes calls these cabinet rivals. But Zero Hedge puts this out, and I think it's interesting.
Sure.
If Trump keeps teasing tariffs the next 3 years, he will force end customers to keep front-running their effect, generating a buying spree across all sectors seeking to lock in lower prices, and maybe he just actually does nothing.
Oh, it's a stimulus program.
Yes.
That's what we're suggesting now.
For who? China?
Next week, exactly. Next week is going to be fascinating. So you'll be at the inauguration.
Yes.
And these executive orders are going to start almost immediately. We'll be at the World Economic Forum. And basically, everybody at the World Economic Forum is just going to be looking to Washington, D.C. and responding to it.
Yeah, it
That's
is.
basically the whole week.
They're all going to be responding to it, but how different it will be than in 2017, right after Donald Trump was elected into office, where everyone said, this is terrible, this is not American. This time, we think it's very good. We think that he has the right approach, and if we want to go to Mar-a-Lago, please, we will be there.
Different
and frankly,
attitude.
Completely across the board.
Maybe Davos should actually be in Palm Beach this year. I mean, not to throw some, cold water on Davos.
Sure.
But why did they decide to
No, by all means, go ahead.
Why did you do the World Economic Forum the same week as the inauguration and transfer of power in the United States, when we're not sure if Scott Bessent, Howard Lutnick,
Sure.
these individuals are going to have, well, we know they're confirmation hearing, but they then have to be actually voted on and confirmed. Can they even show up at Davos? And these are the people that everyone else in the world wants to talk to.
Usually it's the virtue signaling forum. That's what you go to do. Things are changing, and I think the winds are changing. Really interesting here. The companies are going to focus on core competency, their customers, their stock prices, and we seem to be parking the virtue signaling. We've seen that from Meta, and I think we've got a hint of that from Starbucks as well in the last 24 hours.
There is going to be a change in tone on that level. That'll be interesting. There's also an increase in deal making, and I think we have to pay attention to that too. There's this feeling that, putting aside all of the feelings, where do we want to go? How do we want to do it? Let's do it. And that, I think, is going to be interesting to hear about.
Equities this morning positive, just about by 1/10%. Let's get you some morning calls. First up, Piper Sandler raising its price target on Netflix to $9.50 and keeping an overweight rating, saying the company is a clear leader within streaming. That stock is up by 0.6%. Your second call from Truist initiating coverage on Lockheed Martin with a buy rating, citing its recent pullback as a compelling entry point. That stock also positive by 0.4. And finally, KeyBank cutting its price target on AMD to $150, highlighting underwhelming demand for its new AI chip. Sticking with the chip makers, NVIDIA caught between the United States and China. The CEO, Jensen Huang, set to visit Shenzhen as Washington slaps new curbs on AI chip sales and Beijing investigates antitrust allegations. Joining us now to discuss is Chris Caso of Wolf Research. Chris, welcome back to the program. It's quite a sell-off in NVIDIA. I'll give you the context, of course. We have to acknowledge it's quite a run-up as well over the last several years, but we are down about 11% in 4 sessions. Chris, where is that weakness coming from?
Well, obviously, it's been a very good stock for some period of time, so there's probably just some digestion there. One of the things that we've been somewhat concerned about or setting expectations in the first half of the year is simply that supply needs to catch up with demand for NVIDIA. And, we saw a slug of supply come on toward the end of last year. You're starting the new ramp of their Blackwell program now. We think that there's more supply coming on in the second half of the year, and that's where we have expectation for your more meaningful upside estimate. So it's really a question of supply catching up to demand in this very fast-moving market.
Chris, it's great to speak with you, partly because you can parse some of the noise from the signal. And are you saying right now, before we get to some of those delays in the Blackwell chip and others, are you saying that some of the tit for tat between the U.S. and China is more noise right now for NVIDIA shares than some of these other issues?
Right. So today, NVIDIA is selling very little into China directly because of the export controls that are already in place. Some of these new things that were discussed would affect, what they call sovereign AI, which is, the ability of NVIDIA to ship to, third countries and such. And I think there's some concern there that China could potentially use some of those China-friendly countries to park AI servers. And, the purpose of this regulation is to, kind of close that loophole. It's an ongoing situation. Obviously, there's a new administration coming in. Rules can change, but that's kind of the concern right now. But I think, the bottom line for NVIDIA right now and what's most important for the stock is just AI demand is very strong and much more than NVIDIA's ability to supply. So the point in which some of these things would concern us more is when supply caught up to demand and they were no longer supply constrained. Then you worry about, incremental changes in demand. But that's not the case right now. Supply is well below where the requirement of customers for more AI chips.
In most businesses, this would be an incredible positive, just that demand was so outstripping supply. At the same time, yesterday there was news that a certain Blackwell chip was overheating and actually has been delayed even further, and that caused a number of the big tech stack companies to withdraw orders. How much does that become a headwind increasingly, that if there is this disappointment, companies aren't going to be springing to pay all of this money at a time where their shareholders are getting impatient to see results?
Yeah, on that one, and I can't comment directly about it. It's news from a different source, but I consider that to be, kind of on the order of noise as well. There were some delays in Blackwell actually that emerged over the summer where they decided to change the mask set and make some changes to the product, and that delayed the launch of Blackwell by a month or two. Really didn't have any impact. Again, it's that underlying thing that demand is so ahead of supply, and there's not really direct substitutes in the market for NVIDIA. NVIDIA's got the vast majority of AI demand. So, to the extent that NVIDIA is tweaking the product and running on these one-year product cycles, the customers are more than happy to wait because of the performance for NVIDIA product. Now, you also have another product cycle coming in the second half of the year, Blackwell Ultra. And what's happened is because Blackwell was a couple of months pushed in the site in their launch, and we're on one-year product cycles. Well, Blackwell and Blackwell Ultra, those kind of product cycles get jammed into one another. That's also in consideration from the big customers saying, do I want to deploy Blackwell? Do I want to wait a couple of months for Blackwell Ultra? These are all kind of things in the mix. But again, that underlying premise that demand is well ahead of supply is what's going to drive numbers, in our view, particularly in the second half of the year.
Chris, just before you go, I'm not going to ask for a bond target. Don't worry. I won't ask about where you think yields should be or anything like that.
Right.
Just looking back over the last several years, Chris, how has the stock tolerated these bouts of high yields? We saw this in 22, in 23, saw a bit of it again in 24. How does this stock typically do?
Well, again, with rates, the concern on tech stocks in general is just what happens to the multiples. So, high multiple stocks as rates change become a concern. For NVIDIA right now, and especially given this pullback, the stock is trading in the 20s in terms of a forward PE. Considering the growth rate of this company, that is a very, very reasonable multiple for a company that's been growing at this rate. So, on that basis, given the relatively moderate valuation here, rates don't concern me very much.
Chris, appreciate your time. Smart stuff as always, sir. Chris Kaser there of Wolf Research on NVIDIA. Does the same logic apply to the likes of Apple and others?
Less clear that the growth trajectory is the same as with the likes of NVIDIA. That makes the multiples harder to justify.
As always, earnings season for me begins at the end of the month when we get the tech plays.
So it doesn't
Apple
begin, not with Delta? With the airlines?
Sprinkle of Delta, bit of KP Homes, that kind of stuff.
JP Morgan.
The financials tomorrow morning.
Goldman Sachs.
I find it really boring.
Really?
I do, yeah.
I actually think it's going to be fascinating.
Let's see how fascinating it actually is.
Well,
right?
That's why you're not here.
I'll be here for it. You'll be watching somewhere from New York. This is Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every trading day. Balance of Power, live around the world only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Schnally writes in, bank earnings are not boring.
Of course not. Well, good for
it's
you.
It's the fire hose of numbers, you know. I just want to do this after hours, after the
You
closing.
want to do it after hours around a nice table with a glass of wine.
Warm meal, settle down.
Warm milk.
Read some earnings reports. Equity futures fading, going into PPI data. That story just around the corner. That data drops in just a moment before CPI tomorrow morning. Equities just about stable. With those numbers, let's cross over to Bloomberg's Michael McKee. Good morning, Mike.
Good morning, John. Better news off the top, at least, as the PPI headline comes in half of what was expected. The forecast was for a 0.4 gain. It's only 0.2. Core rate comes in flat at 0 after a 0.2 rise the month before. The forecast was for 0.3. And the ex-trade number just up 0.1, same as last month. So where does that leave us? 3.3%. Just a little bit higher than it was the prior month, but under the forecast. For core, 3.5%. That's up a tick from the prior month. And for the ex-trade number, 3.3%. So all in all, it appears that this is a relatively good news for the economy and for the Fed. They don't need to worry about inflation at this point, but it doesn't tell them that they need to start raising rates. And so this should be, I would assume, somewhat market friendly. Final demand goods up 0.6 during the month, and final demand services unchanged. So goods was the price increase during the month, and a lot of that was gasoline. So this is all in all a much calmer report than people had anticipated.
Mike McKee, thank you, sir. That was the right assumption. Check out the equity market. As we often say on this program, you can learn something from the data, and you can learn a little bit more from how the market responds to it. This market's very jittery about the inflation story. Look at equity futures, almost totally unchanged into PPI, and up 0.75% coming out of it. The Nasdaq up by 0.9, the Russell up by 1.4. Check out the bond market. Off the back of this, yields down across the curve. On a 2-year, we're down 2 basis points. On a 10-year, down a handful. We're down 2 basis points or so. 4.75, 74 on 10s. And in foreign exchange, just a bit of a break for the euro and other currencies as well against the US dollar. We take some more heat out of the dollar trade. Euro dollar positive on the session by 0.2%. Lisa, on a little downside surprise on PPI.
What is fascinating to me is that the biggest move is in the equity market right now, bigger than the bond market, which I'm actually surprised about at a time when we're wondering what's driving Treasury yields. I just wonder going forward how much the prospect of another rate hike is what's spooking stocks, and if that's taken off the table, they can keep ripping.
Sonia Meskin of UBS joins us now to help answer those questions. Sonia, good morning.
Good
morning.
to see
you. How good news is that PPI data from moments ago?
It is very good news, but to be clear, we do actually expect in the UBS, and we have been saying this for a while, we do expect inflation to be temporarily a little sticky in Q1 of this year and then to continue to decelerate.
What is it about Q1s? Because we did this in Q1 of last year. What is it about the first quarter?
It's the seasonals, and frankly, since COVID, really, some of the seasonals have been just off, and we see it in the labor data and we see it in the inflation data.
So how much do you see an actual disinflation that's taking hold? Because the numbers have been very noisy. PPI tends to be something that people look through as not necessarily indicative of what's going to come out with CPI. What do other data really say when you take a look at them?
You're exactly right. So the PPI is actually more relevant for the PCE, which is in turn quite relevant for the Federal Reserve, right? The Federal Reserve has said many times that they really see the core trend in inflation as the core PCE trend over time. But the CPI is very important. That's what the consumer pays at the register, so to speak. And for the CPI, we do see still an upside for the release this week tomorrow. And that is coming primarily from, just like here we saw an uptick in energy goods prices. We see that also in the CPI tomorrow as well.
What's fascinating to me is that people are trying to wrap their head around the ramifications of the strong dollar. And we've been talking about it with respect to corporate earnings. We've been talking about it with respect to demand for U.S. assets. There's also a question of the disinflationary impact of that when exports and imports in particular have been increasing quite significantly. How much is that a piece of what we're seeing, particularly in data like PPI?
Absolutely, but however, historically, it's taken quite some time for the strong dollar to translate into prices in the United States. And so here, we would only really see it so quickly if we saw truly good evidence of a ramp up in imports ahead of anticipated tariffs. We don't really see much conclusive data on the ground on that front to definitively say that this has had an impact.
What do you make of this basically competing narratives we see in the space when it comes to tariffs? Broad-based, ones that may be a bit more gradual. How do you take all of that and put it into an outlook for 2025?
Extremely difficult. The main point I would say of the outlook is that what we're expecting is uncertainty, and the key area to watch for us is business investment and how much this uncertainty around tariffs that businesses have already expressed in some of the survey data is actually going to translate into their investment plans and into their hiring plans.
So everyone is talking about Trump 2.0 being solid for growth, but the fact is, if it's so uncertain, so unpredictable, do you just have paralysis?
Well, potentially, yes, and that's exactly right. And I think the narrative has been shifting, and the narrative has been shifting in part because there is so much uncertainty regarding what the administration will actually do.
So when we look forward, we have, of course, CPI tomorrow, and then we're heading into the administration. We hear we have Inauguration Day and beyond when we start to get a whole host of executive orders. What are you looking for in particular? What could really move the needle for your forecasts?
Well, any certainty around what happens around immigration and tariffs will be very important into our input for the labor market and for industrial production and business investment.
Sonia Mesker of UBS on the back of PPI. PPI coming in just a little bit softer than expected there. And off the back of that, going into CPI tomorrow, equities with a nice lift. We're up by about 0.5% on the S&P 500. Yields are lower by a single basis point across the curve. On a 2-year, we're down to about 4.37. And in foreign exchange, the euro is slightly stronger, but not a major move. We're fading a lot of this already. Euro dollar positive by 0.1%. Go back to what I said a bit earlier. This market's very jittery about the inflation story, Lisa, particularly going into CPI tomorrow morning.
Yeah, and it comes at a time where the jitteriness really is stemming from the bond market, which is the reason why I thought it was actually interesting. We just didn't see a bigger move because what we saw on Friday from the jobs picture was a significant shift in expectations in bond markets. PPI tends to be sort of less loved in terms of an indicator. So it's just another noise factor that a lot of people point to ahead of CPI tomorrow.
We were talking about the bank earnings coming out tomorrow as well. Going into the bank earnings, bit of a shift over at JP Morgan, a personnel shift that we need to talk about. The COO, Daniel Pinto, to retire at the end of 2026. JP Morgan naming Jennifer Piepszak the COO effective immediately. Pinto to relinquish duties as of June 30th, 2025, Lisa.
Yeah, and Daniel Pinto, just to remember who he was, he used to be the co-head of global fixed income for the investment bank. He was then the sole head of it. He has been with the bank for many years. He was head of the emerging market markets team, et cetera. There's a real question here about whether this is a rejiggering of the deck chairs ahead of a possible succession, or whether this is a question of just trying to consolidate leadership, or whether they just want to have lives.
Just confirming as well, Marianne Lake and Mary Odos to continue in their roles. And just to answer, yes, I'm sure that is true. I'm sure Dan Pinto would like his life back. I think that given that that new building on Park Avenue is going to be wrapped up in the next 12 months or so, there's going to be a lot of questions asked about succession and whether we're getting closer and closer to the big man making an exit.
We've seen that at a lot of other firms, and that's something that I think a lot of people keep asking at a time where certainly in the private equity sphere, we've seen the changing of the guards in a pretty significant way.
A change over at JP Morgan. The COO, Daniel Pinto, to retire at the end of 2026. We've got this from Jen Peepsack. She will become the COO effective immediately. We get numbers from JP Morgan tomorrow morning. Let's turn to Tom Titsouris now of Strategas, looking ahead to the economic data tomorrow morning as well. CPI 8:30 Eastern Time. Tom, we just got PPI. How encouraging was that number ahead of the headline inflation read tomorrow morning?
Well, thank you for having me on this morning, but that number is absolutely a breath of fresh air, and we've seen a little bit of a relief rally in the bond market because the bond market really needed it. But we got to see some sort of improvement in CPI as well for the bond market to really start to see yields push a little bit lower. So we still got one more number that we've got to take a look at. But this was certainly a relief to see this come in less than expected.
Tom, do you think that bond yields have been rising because of inflation expectations?
No, absolutely not. In fact, when we look at inflation expectations, they've actually been relatively muted if you look at 5-year, 10-year break-even inflations. What we've seen rising is real yields. Now, economic theory, financial theory tells us that real yields tend to rise for essentially 3 reasons. 1, tightening. 2, inflation volatility, more so than inflation. And 3, supply. Tightening affects the front end of the curve, 0 to 2 years. But tightening really, that is Fed rate hikes. But that really doesn't affect the 10-year part of the curve that much. What's really affecting the 10-year portion of the curve is supply, the concern about Treasury supply, not just because of future deficits, but because of prior deficits that were pushed into the T-bill market that are now going to have to be scooped and tossed back into the 5 to 10-year portion of the curve. So the market is worrying about all those Janet Yellen T-bills that now have to be refinanced.
So, Tom, do you think that this backup in longer end yields actually has a lot more to go? Or do you think that we're kind of hovering, as people keep saying, in the danger zone that will become a self-fulfilling cycle that will send yields lower?
Well, there's 2 things here, sentiment and the ability for shorts to continue to pile into their short positioning. Sentiment has clearly been supportive of yields pushing higher because, simply put, look at the jobs report, look at prior inflation data, look at the jobless claim numbers. So sentiment has allowed shorts to continue to come in here. But there's also a phenomenon where there's essentially, if shorts start to get squeezed, then obviously they can't continue to put those trades on. In the cash markets and the futures market, shorts are not being squeezed right now because supply is more than ample to support those shorts. Likewise, in the futures market, in the derivatives market, swaps markets, there's a phenomenon going on where shorts who are putting on curve steepeners continue to be compensated for those trades. So the positions technically are not getting squeezed out, and sentiment continues to support higher yields. So the only thing that's going to break this right now is something on the economic side that tells us that inflation and the labor market are cooling. Today's number helps, but we need more.
Tom, you're critical of the current Treasury Secretary, Janet Yellen. In your note, you're saying that she's leaving Scott Bessent with a bond market crisis, and you point to the massive pace of T-bill issuance. Do you not think we're going to see that pace continue under a Bessent Treasury?
Well, they may have no choice but to continue it for a very short period. But the problem that the incoming administration is going to have is they won't have what I like to call the Treasury's overdraft facility. That is the reverse repo facility, which allowed the Treasury to issue these T-bills without drawing out of bank reserves. That has shrunken from about $2.3 trillion down to $100 billion. So the new Treasury Secretary would love to do what the prior secretary did, but I just don't think they have the capacity to do it. They can do it for maybe 2 or 3 months before they're going to have to start really taking a hard look at raising coupon auctions, which that announcement could come in 3rd quarter with a start to coupon auction increases in 4th quarter. So I think the new administration would love to do that, and they'll do it as long as they can, but they just don't have the runway to do it like the prior administration had because of that reverse repo facility.
If they don't have that sort of runway, what is that going to mean for the bond market?
Well, it means exactly what we're seeing right now. The bond market shorts are going to continue to pile in, sort of like a George Soros type trade, where they're going to try to break the Treasury and force them to make some sort of fiscal move towards fiscal conservatism in the near term, because absent that, the curve steepeners have further room to run, or absent a weakening economy. So I do think that we're going to see yields continue to trickle higher, all else equal. If the data continues to come in at expectation, you're going to see the curve steepening, and that will eventually put some sort of kind of roadblock on a very aggressive fiscal expansion in 2025 and beyond. We're not there yet, but shorts have further room to run.
Tom, are you just sitting on a big pile of cash and some gold bars?
Well, you know, the funny thing is, despite the volatility here, we do think that investors are being compensated in terms of, one, the excess yield above not just current inflation, but expected inflation is still pretty attractive here. You're looking at 10s at 470. You're looking at cash at, we'll call it 430 or so. So these are relatively attractive yields. And what's more, investors, for the most part, can inoculate themselves from much of that forward-looking yield volatility risk by doing things like barbells with their treasury or corporate portfolios, or even ladders, a more passive approach. So there's ways to reduce the interest rate risk and to continue to clip that coupon in fixed income, that coupon that's yielding above inflation. So I don't think you need to sit in cash. I think there are plenty of ways to manage this interest rate risk with some curve positioning trades.
Tom, enjoyed the perspective. As always, it's good to hear from you. Tom Tsouras there of Strategas, following PPI coming in softer than expected. Tom calling it a breath of fresh air going into CPI tomorrow. Bond yields just about unchanged now. Lisa, we've talked about this a few times, worth talking about again. I'm not sure the bond vigilantes are out to play in the Treasury market just yet. Twos are trading basically in line with where Fed funds are. Mike McKee talked about that yesterday. RBC suggesting that we now believe the Fed has already arrived at their terminal rate for the cycle, so that would make sense for twos to trade here versus Fed funds. Then you look at 10s, there's only a little bit of steepness in the curve, 40 basis points or so. Hard to really bang the table and say the bond vigilantes are out to play in the Treasury market. Not to say they won't be, but hard to say they are right now.
Especially if people basically think that inflation is sticky here and growth is pretty good. It becomes this question of, are people just trying to hope that the current rates that we're seeing right now in the market are going to fade eventually when people see sense, or is this the new reality, and are people struggling to really get their heads around that?
The opening about 45 minutes away, equity futures positive by 0.4%, with an update on stories elsewhere, including a little bit of breaking news. Let's get your Bloomberg brief with Danny Berger. Hey, Danny.
Hey, John. We start with the latest in Los Angeles. Officials are looking into what have caused the wildfires in Southern California. LA County Sheriff Robert Luna says that they're investigating whether power lines owned by Southern California Edison could have sparked the Eaton fire that's devastated Altadena. The CEO of Edison's parent company, Pedro Pizarro, tells Bloomberg that there's no evidence the lines were having any issues. And some breaking news in the last 30 minutes or so. Daniel Pinto, JP Morgan president and COO, is retiring at the end of 2026. Pinto would have been at the company for more than 40 years, and he will continue to serve as vice chairman. Jennifer Pipesack, who is currently co-chief executive officer of the Commercial and Investment Bank, will be the new COO. Traffic in the busiest section of Manhattan fell 7.5% during the first week of the city's congestion pricing plan. The data from the MTA shows that travel times fell on most major crossings into Manhattan. The MTA hopes the plan will continue to reduce traffic even as driving picks up in the spring and summer months. Officials expect to release more data on revenue collection data in the coming weeks. And that's your brief. John.
Danny, thank you. I've been speaking to the cab drivers repeatedly over the last few weeks. We have the same conversation every time I get out of the cab. So, it's quieter. Is it just because it's January and it's cold, or do you believe it's congestion? Getting mixed reactions.
What do they say?
Some people think it's congestion pricing, others just think it's January. My guy yesterday thinks it's just January and it's winter, and things will pick up again in a few weeks' time.
Okay, that doesn't make sense, and I'll tell you why. Because if it were just cold in winter, wouldn't more people want to drive rather than walk? Just saying.
Don't know. Maybe they're just not coming into the city.
People don't go outside when it gets cold. Come on.
Lisa, I'm just giving you the feedback from the research.
Also,
with
February's
no
cold too.
None of
So
my bias.
have to be months away to find out.
It's my daily research, all right?
Okay, actually, I
Bring
embrace it.
you another opinion tomorrow if you come into work. I'll share it with you.
Bummer.
Let's set you up for the day ahead. We'll do that next. From New York City, this is Bloomberg.
you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg brings you breaking news 24 hours a day. Powered by 2,900 journalists and analysts in more than 120 countries across the globe. Bloomberg Television. Context changes everything.
Opening bell, let's call it 40 minutes away. Equities positive by 0.6%. PPI coming in just a little bit softer, going into CPI tomorrow morning. With some movers, some morning movers, it's Manus Cranny. Hey, Manus.
Jonathan, very good day to you. KB Homes, the very personification of the American dream, home ownership, and it's on fire, quite literally. Net orders soared 41%, revenue of $2 billion. This is the real personification. Buyers continue to demonstrate a desire for home ownership. But here's the thing, even though rates are at 7% for a mortgage, 60% of the orders that they delivered had mortgage concession, and they will continue to use it. A deal on the slate for H&E, you've got United Rentals adding to their portfolio in construction and industrial, paying $3.4 billion in cash, 106%. Oh, to be a share owner in that. I'll leave you a view on Signet. This is the owner of Zales and Jared on the street, the jewelry retail fronts. This is the worst day for them if we open here in 5 years. People are trading down. They're trading down in terms of jewelry and gifts. Jonathan.
Anas, appreciate it. That stock getting hammered down 15%. Just to give you a flavour of what's coming up on the calendar, your trading diary through the rest of this week. Tomorrow, we'll get CPI and big bank earnings kicking off with JP Morgan, Citi, Goldman and Wells Fargo. On Thursday, earnings continue with Bank of America and Morgan Stanley. Plus, we'll get retail sales and another round of jobless claims. And on Friday, we'll get housing starts. We're also keeping an eye on the fires in Los Angeles as firefighters brace for dangerous Santa Ana winds to worsen conditions. Joining us now on that front is Bill Waddell of AccuWeather. Bill, give us the latest, please.
Good morning. Yes, we're at a command post with the National Guard and firefighters. We're talking about yet again another rare case of a particularly dangerous situation for a red flag warning that's usually reserved for extreme events every few years, but we've had several in recent months. We are expecting wind gusts 60 to 80 miles an hour in some places today. The big concern is those winds could rekindle or start moving the flames where there's containment with these fires. Also, the threat that ash and embers could be carried miles through the air, landing in these neighborhoods. So we've been with firefighters up in the hills where I was yesterday. They were dousing the homes that were spared by the fire, trying to prevent them from catching fire if any of those embers blow into the neighborhoods. But just seeing all of the businesses that were destroyed, the homes lost, I got to tell you, I saw a lot of vehicles, including electric cars, that were destroyed, and those molten metals and debris just all down the streets. We're talking about a massive cleanup ahead once these fires are contained. AccuWeather's preliminary estimate for the total damage and economic loss from these fires now at $250 billion to $275 billion. There's going to be a massive ripple effect, economically speaking, not just here in California, but across the nation. Our experts at AccuWeather are telling us this is going to make the insurance crisis in high-risk areas even worse, and they tell us that preliminary estimate that may climb once again.
Absolutely devastating. Bill, appreciate your time, sir. Stay safe. Bill Waddell there of AccuWeather. Truly a perfect storm. And Bill talked about the economic impact. That's going to distort the data, influence the data, impact it for months to come.
Yeah, at a time when we're already dealing with noisy data, of course, as so many people remind us, that's the least of our concerns. We hope that people are safe, and frankly, we're concerned about some of the embers and what actually is getting burned. Nonetheless, going forward, how do you move forward when you have to pay these kinds of costs for disasters that are incurred around the country, and how much ammunition do you have to really make sure that people can get back to homes and keep going with their lives?
Well, Speaker McCarthy said to me last week, this is going to be a day one priority. When they want to maybe declare the border a disaster, they're going to have to put a lot more money and funds towards towards California. And at the same time, I'm thinking of Florida because people are still dealing with the hurricane effects. We have a lot of crisis right now in this country, and a lot of money that's going to have to be doled out.
A big rebuild effort in the Southeast, big rebuild effort about to take place in California. If this thing ends sometime soon, we can actually focus on that, Lisa, but at the moment, we can't.
Yeah, and it raises this question about the flexibility to build those homes at a time where we've already seen shortages on that level. Or on the flip side, are we looking at the potential loss of economic momentum in regions like this? I mean, really, again, talk about the noise coming down the pike.
Already expensive to do it, already incredibly labor constrained, and it's going to be even more so in the months to come, I'm sure. Coming up tomorrow, your lineup looks like this. Gerald Cassidy of RBC will catch up with Liz Ann Saunders of Charles Schwab, Peter Cheer of Academy Securities, and David Kelly of JP Morgan Asset Management. Tomorrow morning, what a morning. You'll hear from JP Morgan and some of the biggest banks on the planet. Then at 8:30 Eastern Time, you'll get CPI inflation data. It's a little bit of everything tomorrow morning, which is why you should all be here, at work, present, logged onto a Bloomberg terminal, and not on a ski slope somewhere in Europe.
I agree.
Bramo, you enjoy yourself.
Thanks, I appreciate it. What a send-off.
I'll see you next week in Europe. From New York City, thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
To succeed in Wall Street, what skills do you need? You need to be somebody who claws people on the back, people that you have to be tough, you have to be fighting people all the time. What are the skills that really take to succeed in Wall Street?
Great question. Of course, you have to work hard. So I can tell you what I found for me, and it's probably counterintuitive. I had to stick out, which is interesting because I made the decision earlier. Being really the only woman, I already stuck out, and I thought I might as well double down on that. I can't hide. So how did I do that? It was by being a contrarian. And I refused as a research analyst to ever publish research reports that said me too. That said, oh, IBM reported earnings. They came in 2 cents ahead. One of the pennies was currency, the other penny was lower G&A, blah, blah, blah. Forget it. Big calls on big stocks. My very first piece of research I published was very negative at a time nobody did it. I stood the heck out. And when I was right, that elevated me. And David, I've done that as a research analyst, but I did it in business as well. Here's a business strategy. If everything's fine, just keep your head down and execute. Every once in a while, you have a big insight, and you can build an entire business, in fact, an entire industry around it.
About artificial intelligence. Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Good morning. A little bit of a rebound today after we finished in the green yesterday. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Sonali Bassett. Katie Greifeld is on assignment, and Bloomberg Open Interest starts right now.
Coming up, another report that Trump's economic team is considering a gradual approach to the tariff hikes. The dollar dips on that Bloomberg scoop. The latest word on tariffs comes as traders digest today's PPI data and brace for big swings tied to tomorrow's CPI report. Also, as we kick off earnings season. Plus, a shakeup at J.P. Morgan. The bank names Jennifer Piepszak as its new chief operating officer, replacing Daniel Pinto, who will retire at the end of 2026. First off, let's take a look at where markets are trading. Yesterday, we actually climbed up and finished in the green. Right now, we're looking at another gain for S&P futures, about 0.4%. As we kick off earnings season, NASDAQ futures up a little bit more than 0.5% right now. And the 10-year yield, although it's climbing a bit, it is still holding at the same level we saw roughly yesterday, 478, to lend your money to the U.S. government for 10 years. Sonali, what are the stocks that we're watching today? I know there's some deal news.
Yeah, there sure is. We're looking at H&E Equipment Services first, though, because it is soaring after United Rentals agreed to buy it for $3.4 billion in cash and expand its fleet of construction equipment. You do see this now doubling to $90 a share pre-market. Just incredible here. Deal flow just keeps coming into 2025. Also watching KB Home up more than 13%. It reported revenue and deliveries for the fourth quarter that beat estimates. We are in earnings season in addition to deal season, apparently. And Signet is plummeting because the owner of Kay Jewelers cut its fourth quarter sales forecast, citing consumers who opted for lower price points this holiday season. We have already been seeing hints of that, Matt. And now let's see how much that continues into this earnings season.
Yeah, the consumer is a big question. Actually, the NFIB, National Federation of Independent Businesses, monthly small business optimism index jumped to the highest level since 2018. It's almost back to the level that we saw this month 8 years ago, before Donald Trump took office the first time. NFIB chief economist Bill Dunkelberg said expectations for economic growth and lower inflation and positive business conditions have increased in anticipation of pro-business policies. But Renaissance macroeconomist Neil Dutta says an important distinction between now and 8 years ago is that the consumer doesn't appear to be confirming the move in small business sentiment. In December, consumer expectations slid to a 5-month low. And of course, given the recent sell-off in equities, the backup in rates, and the higher price of oil, it's unlikely that the consumer is going to come out swinging to kick off 2025.
Right. If you think that the 10-year rate of almost 5% is high, you're a consumer with a credit card rate of more than 25%. That's really high. And so when we think about big bank earnings season, we're going to be thinking about whether you're seeing those delinquencies rising and the consumer actually weakening. It is a busy season. There's political news. Of course, the confirmation hearing started. There's a lot of rumors around how the Trump administration will deal with everything from TikTok to tariffs. What are you watching?
Yeah, I mean, all of that stuff makes it a very busy day. Of course, we also got PPI, producer price inflation data this morning. It did come in below estimates. We want to break down the reading with Bloomberg's Michael McKee. He's going to look into the details for us. So, Mike, what do we see?
Well, we see some good news for the warm-up act for tomorrow's CPI, I guess, with the PPI headline coming in at half what was anticipated, just up 0.2 during the month. That puts the year-over-year at 3.3%. Also, slow growth in the core and the core ex-trade. They are up 3.5% and 3.3%, better than expected in both cases. So the markets are relatively happy. What did it? Well, a decline in food prices was one of the reasons that we saw prices restrained in the PPI. Overall, down 0.1%. But look at this. Donald Trump said he was elected to bring down egg prices. They had gone up 55% in November. That really is because of the bird flu, not because of any Biden administration policies. But look what happened in December. They were up only 3%. Joe Biden goes out on a high note. Tomorrow, though, is what everybody is waiting for. That's the big show, the CPI, and the CPI is expected to also show a little bit of a rise, not as much as was expected for the PPI, but maybe this is good news in the long run. The thing about the CPI is it's shown this seasonal pattern. You remember last year, we saw CPI prices, the CPI index rise into the end of the year, and the Fed stopped its plans to cut rates at that time because they were worried about inflation taking off again. Same pattern seems to be in place this year. Do we see that continue or not? That's going to be the real question tomorrow.
We're at the part of the cycle where I feel like you really have to break it down into components now, even too. I was looking at Cameron Christ. I love how he put this. Once bitten, twice shy. Could be the reason we didn't see that bond market reaction for the modest data today, even with services inflation showing some optimism there. What do you make of that? Where should investors be looking in terms of the component pieces tomorrow?
Well, tomorrow you want to look at the usual suspects, but particularly housing, also airlines. Airline fares up big in the PPI, and used cars are expected to decline or to post just a small increase after a bigger increase last month. But it's the PCE that the Fed moves on, and some of the components in here were pretty good. Portfolio management up just 0.2%. Now, that's what has driven a lot of PPI inflation that goes into the PCE number. And that'll be interesting to compare with you tomorrow. Bonus season and bank earnings. We'll see how much of that PCE number is going to be accurately reflected when you and I fight for airtime tomorrow between me and the CPI and you and the bank earnings.
Does that count as labor costs when we talk about banker bonuses?
Well,
for some.
For some,
that's you.
All right,
until the robots take over.
Mike McKee, we will spotlight CPI with you tomorrow. It's not all about bank earnings, although it's like Shinali's Super Bowl. Wells Fargo Investment Institute Head of Global Market Strategy, Paul Christopher, joins us now to talk about what's going on in these markets. And Paul, I got to say, you know, last week, on Friday, going into the weekend, it felt really troubling after the good news that we saw in the jobs market. The spike in rates and the fears about inflation seemed to come to a head, and I thought the market was really at a turning point. Did you feel that too in terms of the equity indexes turning down?
Well, I mean, the markets got this way in December, too, around the inflation report and then the subsequent Fed meeting. And it seems like every time the markets get a little bit disappointed in terms of Fed rate cuts, we see some selling, but then the trend resumes. So, no, wasn't really bummed out about Friday. It looks like a buying opportunity to us because you've got a tight labor market, one that's normalizing but still tight, and that drives services. And services will drive wages, and wages will ultimately drive inflation. So our inflation forecast at 3.3%, we think stocks like that for 2025, and so we're looking to buy here.
How do you bring in kind of the uncertainty here around tariff strategy? Because ultimately there is still a concern about what kind of inflationary impact that could cause. Where do you stand?
Yeah, that's a big unknown, but you have to take the whole picture. So first of all, the whole policy picture is tariffs are negative, yes. Immigration restrictions are negative for the economy and markets. Yes, that's also true. But then you've got deregulation and probably, we think, very probably, an extension of the 2017 tax cuts. And both of those are positive. So how do you know which one is larger? Well, maybe we don't know yet because we haven't seen all the details. This morning's hint that he's going to phase in tariffs, that would be a very positive factor. But then go to an even bigger picture where you put those policy unknowns against an economy we think is still pretty strong. consumers may not have finished the year as strongly as we would like, or coming into the year as strongly as we would like, but we think they will drive the economy this year. So will the policy uncertainties be enough to derail that economy? We think, all things taken together, no.
You know, I was reading a Neil Dutta note earlier, his concerns about the consumer with falling stocks, rising rates, higher oil prices. Shanali brings up the point that, you know, there's so much credit card debt, and a lot of that is over 25% interest. I know auto loans that I look at all the time are double digits. Isn't the consumer going to face a lot of headwinds this year?
Consumers have been facing headwinds now for a couple of years, and that was one thing we got wrong in 23 was looking too hard at some of that aggregate data and not breaking it down a little bit more into quintiles. If you look at the lowest two quintiles, yeah, they've been holding their breath underwater now for a couple of years, since 22, 23. But the upper quintiles, the upper income quintiles, have done much better, and especially that top quintile that especially can gain from higher stock prices. So they can turn those gains into spending, and that's helping to drive the economy. So you've got this real divergence going on. You can see the same thing between small businesses and larger businesses, and the larger businesses have been driving things. So we do like large cap stocks here, and we do like the consumer overall to continue driving things.
So if you're concerned about kind of the bottom two quintiles in terms of wealth and income in the United States and their ability to draw consumer spending, then what about kind of the second to top? I think a lot of investors are looking around and saying, when does the pain start to spread in terms of the way the consumer is able to put that extra dollar to work?
Yeah, that's a good question, too. So, you know, if you start moving down the income quintiles from the top towards the bottom, the one, let's say the second one from the top, or the one right next to the top, that's one where you still have wage gains that are in that 3 to 4% range. And if inflation can stay between 3 and 3.5%, well, then you're basically netting out a positive gain in purchasing power every year, or you know, and on a monthly basis too, for those consumers. And then you go down another quintile, and they get the same benefit, the same tailwind. So it's really those consumers on the bottom who've overborrowed. Maybe they're close to delinquency. Maybe they're having trouble making even the minimum payments, and sympathies to them. But in terms of the overall economy, it's those other quintiles that are going to really drive things by either wage growth over inflation, or with capital gains that turn into spending.
Hey, I'm looking at your top 5 portfolio ideas for 2025. Your cross assets, so it's not just stocks, right? Prepare for abundant liquidity. You point out position for a cyclical economy, but remain tilted towards the U.S. Expand opportunities in AI. Be careful of extreme risk. But one that I think is really interesting, rethink investment income. What do you mean by that? Is that just taking advantage of these higher rates?
Yeah, well, that's a big part of it. So, you know, investors have really become accustomed to what I might call the comfort food of income, which is to go to CDs, to go to short-term treasuries, and especially money markets. Money market fund aggregates are huge. They're off the historical charts. But that's kind of comfort food, because you don't see a lot of risk in those, and you get that 4 or 5% rate that you've been longing for many years now. But that rate we don't think is going to hold up as well. It's not going to rise as much as what we're going to see in your ability to lock in those long-term rates here. So you lock in long-term rates that investors haven't seen for years and years, maybe even more than 15 years. You lock in those rates now, maybe doing some dollar cost averaging, a little bit at a time each month as rates gradually move higher. And then you add to that from the equity side. As long as rates don't get much above 5%, and we don't think they will, then we think dividends will become, and it will remain, an important source of not only income, but income growth for investors. So put those two together and kind of put that comfort food aside.
Wells Fargo Investment Institute Head of Global Market Strategy, Paul Christopher. We thank you so very much for breaking down the complications of this market. Coming up, there has been an extraordinary amount of movement on Wall Street at the top levels. JP Morgan COO Daniel Pinto announces his retirement. We're going to discuss his replacement and what it means for Jamie Dimon's succession plans. JP Morgan reacting to the market, Matt. Stick with us. This is Bloomberg.
Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Why does this business model work? Because it's virgin space. It's never been done before. And it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Let's get now to high interest to look at what's making headlines around the world. Hot, dry winds are pummeling Los Angeles and areas of Southern California. Still, a new blaze broke out in Ventura County overnight, but authorities managed to keep that fire from growing. Crews are struggling to contain the flames in Los Angeles that have killed at least 24 people. Wind gusts now expected to be as high as 75 miles per hour. Those blazes have scorched 40,000 acres and continue. Some of TikTok's 170 million users in the U.S. are flocking to two other Chinese social media apps. Little Red Book is one, Lemon 8 is another. The apps have taken over the top two positions on Apple's App Store download charts in the U.S. ahead of an impending ban on TikTok here. The hashtag TikTok refugee has garnered over 44 million views. And NVIDIA CEO Jensen Huang is embarking on a trip to China this week. He's visiting major cities at a time when Beijing is investigating his company's domestic presence and Washington puts new curbs on NVIDIA's AI chip exports. It's unclear if he'll be meeting with Chinese officials during the trip. NVIDIA has declined to comment. And Ares has amassed around 30 billion euros of capital for its latest direct lending fund in Europe. The new fund is the largest of its kind in the region. In fact, Ares has secured the highest level of investor demand for any private credit fund on record, according to a statement seen by Bloomberg. Shanali?
We're going to go over to some of the biggest news on Wall Street this year so far. It's early yet, but JP Morgan's longtime COO, Daniel Pinto, very responsible for a lot of the big gains they've made in the trading and investment banking division, announces that he will retire at the end of 2026. Jennifer Pipsack will replace him, but when it comes to planning for Jamie Dimon's succession, she said, according to a spokesman, that she isn't interested in the CEO role for now. Anyways, Bloomberg senior finance reporter Sridhar Natarajan joins us. The for now, I'm hung up on that. You have Joe Evangelista, who's of course, the spokesman for JP Morgan, saying she's not interested, hold the horses, and an announcement with a lot of pomp and circumstance otherwise. Clearly, everyone's looking at succession planning at JP Morgan. Jamie Dimon has stopped saying 5 years, at least for now. So what does this mean in terms of the new guard rising?
If Joe's statement had ended that she's not interested in being CEO, it would have been much clearer for us, and the clarity would have been nothing's clear atop JP Morgan. But by also adding this clause about for now,
at this time,
we don't know this. At this time, we don't know whether that means in 6 months when Daniel Pinto steps down from his role as both president and CEO, at least those titles, when he relinquishes those titles, Will Jen Piepszak be more interested then? But let's take it at face value right now.
Right.
We should take it at face value right now, and the clear signal they're trying to send is, even though with the slew of changes that they've made today, there's various executive moves that we're seeing at JP Morgan today, Jen Piepszak's clearly saying, I don't want to be successor to Jamie Dimon. So who will be the successor to Jamie Dimon? The hit-by-the-bus candidate, Daniel Pinto, is leaving end of next year. Marianne Lake, another likely candidate, at least in today's announcement, nothing's changing with her role, nothing's changing with Mary Erdos's role. So we really don't have clarity at that front. So only thing you can perhaps say with certainty is Jamie Dimon isn't going anywhere anytime soon.
Well,
for now.
Right, he's not stepping down in 6 months.
No, of course not. And he is, I mean, he appears to be in great shape. You know, investors hang on every word out of his mouth. He's unquestionably the king of Wall Street. But he is turning 69 in March. Wouldn't it be in the best interest of his shareholders for him to lay out a clear succession plan?
And I think JP Morgan will argue that a number of changes that they've made, not just today, but going back the last couple of years, are all aimed towards getting that right. But when you have one of the leading candidates saying, I'm not really interested in being CEO, it doesn't really make Jamie's job easier. And also remember, I think Jamie Dimon is probably having a lot of fun on top. I don't think he's in a rush to leave the stage. And I think till you don't have clarity below him, till you are not certain who can actually take on that mantle. You say King of Wall Street, but definitely, most certainly Dean of Banking. Until you're not certain who can step into those shoes, I think it makes more sense for JP Morgan, for Jamie Dimon to stick around a little while longer.
Well, let's kind of take a Goldman playbook for a minute for JP Morgan. Typically, you want to have a few seats warm, right? Just in case one leaves, you want to put people in competition with each other, because what's a good succession without a good fight? And so if you're not looking at just Jennifer Piepszak, who else are you looking at JP Morgan? Because she has been elevated so fast that you wonder if she's the only real candidate now.
And that's what we would have said, and that's what I would have said before I read Joe's statement, because when you read the announcement today, it's clear that there's only one clear winner, only one person getting a real big promotion, because Daniel Pinto is the second most important executive at JP Morgan, the largest bank in the country. So Jen Piepszak, for all measures, was clearly the biggest winner coming out of this announcement, at least not the big winner from the perspective we care about as to whether we can call her the anointed successor, because she's rushing to say she's not interested in being CEO. And the other interesting thing to me is she's taking on the COO title, not the president title. So when Pinto relinquishes that title in June, I'm interested in seeing who gets that. Do they also give that title to Jen Piepszak, or do they elevate someone else to be the president or co-presidents? Because then we're talking the Morgan Stanley model. Why do I bring up Morgan Stanley? Because that's the next biggest bank, most recent bank to have gone through a succession like that. At the time, they had a COO, John Truzan, and two co-presidents. It was one of those two co-presidents, Ted Pick, who eventually became the CEO, not the COO. So you could get more clues down the road.
And Morgan Stanley, a textbook case for a succession run well, right?
James Gorman now running that at Disney, too. That well.
All right, awesome. I have a feeling we're going to hear more from you in the next couple of days, Sri, as we kick off bank earnings. Thanks very much. Sridhar Natarajan covers the banks for us here at Bloomberg. Tune into our exclusive conversation, by the way, with Daniel Pinto from Davos. That's next Wednesday at 6 a.m. Eastern. This is Bloomberg.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekday weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
There's a lot going on today. Markets trying to rebound after that PPI data, and of course ahead of CPI tomorrow, and of course bank earnings as well. S&P futures hanging below 6,000 all year, man. It is now. It's painful to watch, actually, but it's up 0.5%. There's other things going on as well.
There's a lot going on today. We have Pete Hegseth's confirmation hearing, and we've already heard not only his opening statements, but some senators, including Jack Reed, saying, this is a direct quote, "I do not believe that you are qualified." So that's probably a statement you're going to hear from quite a few senators today.
Yeah, but it really comes down to what certain Republican senators feel, particularly Joni Ernst. That is going to be one a lot of people are watching out for. Of course, this is another test of the slim Republican majority that you're looking at in Congress, and even their inability to agree over some of the most critical posts in this country.
Yeah, we are going to hear from Anne Marie Hordern in about an hour as this hearing progresses, so we'll get you up to date on Pete Hegseth's confirmation hearing to become the Secretary of Defense for the United States of America. Up next, Raquel Oden joins us from HSBC. This is Bloomberg.
Also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me. And I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 120 countries across the globe. Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. We do see futures up this morning after the equity market gained yesterday at the close. S&P futures right now up about 0.5%. NASDAQ futures up a little more. Kicking off earnings season, we're going to see about $3 trillion worth of companies reporting this week. In 2 weeks, there's going to be a $22 trillion week. So it gets a lot busier than this, but the banks really kick it off tomorrow, and Shanali is going to be all over that. You see the opening bell down at the NASDAQ market. I believe we're going to see somewhere, aren't we going to see the ETF group ringing the bell? Defiance, yes, at the NASDAQ market site. Looking for Sylvia Jablonski there. I know she's going to ring the opening bell. Creative Spirit ringing the bell at the New York Stock Exchange. Looks like a slow news day when you check this out, but actually there's a ton going on with the report out by Bloomberg News that Donald Trump is going to gradually bring tariffs in. This is only his advisors who have crafted this plan, according to people familiar. They haven't told him yet. We'll see how he responds on Truth Social. In terms of the stocks to watch this morning, there's been some deals. H&E Equipment soaring after United Rentals agreed to buy it for $3.4 billion in cash and further expand its fleet of construction equipment. That adds to the $15 billion deal we saw from J&J yesterday. And Shanali, we have some actual reporting out in terms of earnings.
We sure do, but I've got to say, the only thing I love more than a deal is an all-cash deal. There's nothing better than that. That's like certainty on the table. Anyways, KB Home, speaking of earnings, up 11% as the market opens. They reported revenue and deliveries for the fourth quarter. That beat estimates. Analysts say that the beat was driven in large part by cost-cutting, buybacks, and a lower tax rate. Also watching Signet, it's plummeting after the owner of Kay Jewelers cut its fourth quarter sales forecast. They cited consumers who opted for lower price points this holiday season. Signet down now about 16% nearly as the market opens. People are worried about the consumer. And as we think about the consumer, companies worth more than $7 trillion are reporting earnings this week and next. We're going to take a deeper look with Bloomberg's Zenitsa Seikova. What are you looking out for, particularly what we know now about that consumer?
Yeah, I think this week the biggest thing will be banks. And obviously Wednesday is a banks earnings bonanza. We have some of the biggest names reporting. There are a lot of catalysts this season. We have revival in deal making, we have share buybacks, we have revenue growth. So there is definitely so much optimism. Obviously, the incoming presidency is a big boost to banks. We've seen it in banks' reactions so far. Obviously, everyone's excited about deregulation, about friendlier tax policies. So we've seen that top in front of mind of analysts. Barclays is very bullish on that. That said, we saw Jefferies reporting, and so far it's been a disappointment. So that's one reason perhaps some on Wall Street are worried about the banking earnings. We've seen some positive news. We saw a glimpse of Citigroup and JP Morgan trading. Seems like things are looking very good in terms of profitability. So Jefferies, obviously what we saw is like disappointment in margin expansion and investment banking revenue. So perhaps that's something a lot of people will be looking at. But of course, incoming presidency, big boost to banks. So that's top in front of them.
Yeah, and higher rates maybe helps them as well. Did we show the a market cap chart yet? Did we show the market cap chart yet? Because I think it's striking. Okay, $3 trillion this week, $4.3 trillion worth of companies reporting next week. But in 3 weeks, here you go. Look at that, $22.4 trillion.
Those are your big tech companies.
Worth of companies. I mean, it's just unbelievable that market cap like that exists, and it's not the entire market, right? I guess NVIDIA is going to be there, Apple's going to be there, all of the Mag 7 can move that needle. But what do we expect?
Yeah, for sure. So we're seeing a lot of volatility in market, which I think we have to feature in. Even when it comes to banks' earnings, obviously now we're pricing close to 1 or 0 rate cuts next year. So all that bullish sentiment towards banks, of course, is dependent on that. When we talk about all those big tech names, we're worried about valuations. They're very hard, they're elevated, and when yields are approaching 5%, investors think about them differently, and perhaps they may not be as nice when they react to earnings surprises. We have Netflix next week. It seems obviously it had a really big rally last year. Wells Fargo is very bullish, still overweight, so valuations are not necessarily a problem. American Airlines had a tough year last year, but we're seeing optimism about it next year. We see so many price upgrades. So for now, volatility in markets hasn't translated into much worry, but we're yet to see.
Bloomberg's Denise Sekova, we thank you for keeping an eye out on all of this. Of course, you saw the VIX over 20 yesterday.
Yes, I did.
Volatility seeping into the markets even before earnings really get started. We are now going to bring in Raquel Oden of HSBC to broaden out the conversation. She's U.S. head of international wealth and private banking. People have been so beholden to big tech, particularly because they've accounted for most of the gains. Every sense of the broadening trade that we've seen has faced pushback, particularly when you've seen rates still edge higher on the long end. Where's the optimism outside of big tech?
That's great. So I would say what we've been sharing with our clients is we talk about the Santa Claus rally that we're expecting for the fourth quarter. That did not happen. So that has caused a little bit of angst, in the markets. But what we've told people is even with the Fed rate cuts, which we've just debated right now, maybe a little lower than we originally anticipated, we're still bullish on the equity markets. And to your point, when we take a look at the S&P overall and we look at corporate earnings, again, pretty strong. So we take this year, we ended at 9.4% in corporate earnings year over year. We're predicting about 14.8% in 2025. That's slightly
big.
Slightly down from 15%. So
It's
to be
still
clear,
a lot, right?
It's still a lot.
You don't expect that bar to get lowered as we get further into the year?
So I don't believe the overall bar gets lowered, but to that point around the tech and the Mag 7, it is really the widening out. And I think you heard me share that the last time, right? We take a look at the Mag 7, about 23% up this year. We're probably predicting that to go down to close to 18%. The important part of that is the widening out of that sector, so the unforgotten 493 will start to rise. And that was about a 4% gain for those 493. We're predicting close to 15% for them this year. So it is still that tech sector, but it's the widening of the sector. As you just said, market caps are pretty high in many of those Mag 7s. So the opportunity for more to drive that, I'd like to compare this time period to the 90s in the same time period, which is that innovation tech evolution that's taken place. We went through that with the dot-com era in the 90s, and we really saw a lot of the same behaviors we're seeing today. What comes out of this is productivity drives profitability, which really drives growth. So we're really going to lean on the markets and the tech sector to really drive that, while at the same time, we're not going to see that level of Fed cut rates that we originally talked about, but it's going to be less about that because it's really going to be the productivity and what I'd say profitability that's going to drive the market.
I mean, the problem with the 90s was we spent so much money to lay down fiber, right? The infrastructure of the internet, which we're all happy to use today, and it's very profitable 25 years later, was too expensive at the start, and we saw that bubble burst. Do you expect the same thing to happen to the AI bubble, if this is a bubble, the AI bubble right now?
So we're definitely not at the bubble yet. We're such at the early inning stages of AI, right? And so that's really where you're seeing all the companies that are now aligning to AI and figuring out how to use it. There's going to be lots of false starts, and there are going to be those that really hit it. So just like in the dot-com era, right? Not every dot-com, made it. You've got to pick the right winners, but you're right. We're going to be in a period of really figuring out how core corporates embrace AI as well as the tech sector. The beautiful thing about AI, it's way beyond tech. It's every sector embracing AI and figuring out how best it's going to help them drive productivity and profitability.
I also want to talk about a different sector now, banks, because we are starting to...
She sure does want to talk about banks.
Listen, this is a trade. I want to pull up the KBW Bank Index, BKX. Take a look at it, because after November 5th, you did see a sharp leg higher in a lot of optimism that rules will be revised, lighter, but a lot of that has been wiped away if you take a look. And it's interesting, over 6 months, every stock in that index was in the green, and then you've seen, what, 5, 6 stocks start to turn negative in the last 3 months. Is the optimism fading? Are the gains already priced in?
So the gains are not priced in. I don't think the optimism is fading. I think the reality is, as we know, in January, you're always going to see this volatility, right? So let's just embrace volatility. But ultimately, if you look at the sector, there's indication that this administration coming in really has an impact on the sector. And so to me, it's kind of wait and see, because the administration can say a lot of things. The question is, will they do it? And the two things that are going to be a big catalyst, right? We all know deregulation, especially the Basel III, right? The ability for banks to not put that much money in reserves will absolutely hit profitability. You add to that corporate tax cuts, right? These are statements. So, like the market, you want to watch and see, will the administration do those things? And that's the reason why you're seeing a little pause or caution. But if they were to happen, those have not even been priced in, right? So that's the benefit. And I just told you about the strong corporate earnings, right? So if corporates are that strong, and you have this other piece, if the administration does what they say, there is the opportunity for banks to continue to do well. What we are all pausing for, though, is that use of how the administration is going to implement tariffs. That is an important piece, right?
And deportations.
And deportations, right? The two go together. So again, the administration is this unknown. Lots of statements made. What actually happens, we don't know. And I think we all are pricing it in and cautiously watching to see what happens. But all those indications make the bank sectors look really good.
I feel like, is it fair to say that nobody believes deportations are going to happen in size? Because everybody just neglects to mention it, but it was part of the campaign, and Tom Holder seems pretty serious about it.
There were a lot of things that were part of the campaign, and so that is my point, right? And the idea here is, one, the markets and the fundamentals, thankfully, are strong. If the administration steps in and does the things that they've talked about, there's possibilities that certain sectors would do very well. But again, it's a watch and see.
Right. All right, Raquel, great having you here with us in the studio. Thanks so much for coming in. Raquel Oden there from HSBC. Coming up, we'll talk about Elon Musk. Could he be the next owner of TikTok? More on that possibility for the social media app next. Plus, Pete Hegseth faces the Senate Armed Services Committee for his nomination to lead the Defense Department. You can watch the full hearing on your Bloomberg terminal. Just type Live Go, or for our blog, TLIV Go on the terminal. This is Bloomberg.
David Bellavia, who earned the Medal of Honor for heroic actions in combat in Fallujah, Iraq. David Bellavia writes the following: Pete is fearless.
In case you missed it on Bloomberg, the China show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House.
We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared in dealing with him again.
Probably are fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The openness of China, including the capital markets, Hong Kong being an international financial center, will be extremely important in channeling global investors.
Don't miss the China Show live every weekday.
A
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
This is Bloomberg.
Time now for top calls. Some of the analyst action that we're focusing on this morning. First up, Instacart is getting upgraded to a buy at BTIG. The firm sees signs of accelerating order growth. The analyst there also says the valuation for the online grocery delivery service is not particularly challenging. Next up is Las Vegas Sands, no longer a buy, according to Morgan Stanley. The analyst sees growth being tempered in most segments. The firm also says tariffs could weigh on its China business, Macau in particular. And finally, Bank America is cutting ag giant Archer Daniels to a sell. The firm says the profitability outlook has soured considerably over the past few months, given risks stemming from the U.S. election. Janali?
Now to another Bloomberg scoop. TikTok owner ByteDance evaluating a potential option for the popular app's U.S. operations for TikTok. Sources say that one of them is selling to Elon Musk. For more on this story, we are joined by Bloomberg Technology co-host Caroline Hyde. Something I've been thinking about a lot is, okay, who would want this to happen? Because if you are China and you are frustrated with the U.S. and the back and forth on TikTok, would China want Musk to be buying it because they're already entangled?
China might, and I'm just going to correct some of the introduction to that, because it's not ByteDance that wants this. ByteDance wants the opposite. ByteDance does not want to be selling TikTok under any duress, and indeed they want to keep hold of it, probably just would ban it.
Well, and China doesn't want ByteDance to sell it either. This is just in case.
In case, and this is the Chinese government from Bloomberg sourcing, potentially trying to work out what are the scenarios that fall out if indeed the Supreme Court does stand by the current Congress law that this is going to be banned or sold. So China is thinking, there is an interesting person that we rather respect, who has a lot of presence in China and is very close to the president-elect, one Elon Musk. Oh goodness, he has his own social media company. Wow, he also has a really strong AI presence. He could benefit from owning this algorithm. And remember, China has such sway because even though they don't have ownership of ByteDance, even though, of course, TikTok's gone to great lengths to say that the Chinese government is a safe distance, they do have the ruling on if indeed an algorithm is sold abroad or exported. They could overrule that. So they have a sway on if US TikTok is indeed sold and who gets to buy them.
Well, I should say that there are reasons initially Donald Trump wanted to ban TikTok. In fact, he acted to ban TikTok, but that was overturned. And that Congress, both the Democrats and the Republicans want to ban TikTok because they're worried China could use that algorithm to spread misinformation or stir up social unrest. They're worried that the Chinese could use that information, the data, to blackmail or intimidate Americans. And they're worried that China could use software updates, ByteDance, I'll say, and China in the same breath because it's China, could use software updates to sneak malware into our phones and computers.
National security risks.
Exactly.
Which at the moment are outweighing for the Supreme Court the right to free speech, which is actually Elon Musk is a big proponent of, and why back in April he put on his own social media platform X that he didn't want a TikTok to be sold because he thinks that speech should remain and free in the United States.
Well, I mean, you're a contributor to TikTok as well as Instagram, right? Yeah. You can say whatever you want. You just maybe can't say it on a Chinese platform.
Clarification, ByteDance cannot be China because they now have U.S. investors as well, some of which are very close to Donald Trump.
Jeff Yass.
Exactly.
Who owns 15%.
Does he want it to be sold to Elon Musk?
Well, does he want to see some value? And so we had Frank McCourt Jr., who has also got a bid, and he actually doesn't want the algorithm, which is an interesting point. But ultimately, if this is going to be worth 40 to 50 billion, which is what Bloomberg Intelligence thinks it could be worth, 30 to 50 billion, well, that would at least be some value going to the US investor base, which also includes General Catalyst, Sequoia, other key players have been in this. So I'm sure that if it was either a ban and they suddenly exit the US and they'll still have remaining money and value in ByteDance. Remember, they own shares in the parent company. And I've spoken to investors who are actually busily buying up ByteDance shares on the secondary market because they think, look, TikTok's going to grow like wildfire, whether it's in the United States or not. It's only got about 20% of its revenue coming from the US. It could just continue to scale elsewhere and leave US TikTok for dust.
So it's interesting that Trump tried to ban this, and federal courts overturned that on free speech grounds. Now, I guess it's because of Jeff Yass's support, right? He's given at least $8 million to GOP congressional and gubernatorial candidates that Trump changed his opinion? Or is it that Barron said, I like TikTok, Dad?
Your guess is as good as mine, but also maybe it was, at the time, his rather general obvious loathing for Meta and for Mark Zuckerberg. Now, times have changed. Mark Zuckerberg has been doing an awful lot to try and align the business of Meta more in time with the next president and the White House. Look, he's just put Dana White on the board. We're seeing that they're removing some of their oversight of speech on the platform, certainly no more fact-checking. And so people might say that, look, with his presence in Mar-a-Lago of late, maybe he's not quite so aggravated at all things Instagram, but that originally was Trump's issue, I think. And also TikTok, as he would say, helped him galvanize a young vote. And he likes TikTok, special place in his heart, as you would say.
The Mar-a-Lago effect on Meta is going to be something to behold as we watch the first 100 days.
That's an interesting segment in itself because a lot of people around Zuckerberg say he already was bustling to break free of these sort of woke, liberal constraints, and this has just given him an excuse to do it.
And is it a fiduciary duty to align yourself with the next administration?
True,
is also the
true.
Key argument.
Yeah.
Or patriotism. Anyways, Caroline, whatever you want to call it, right? For more on that story in Bloomberg Technology at 11 a.m. Eastern Time. There's a lot to break down for it. Now, coming up, deal making has been off to such a hard start in 2025. We're going to take a look at the M&A landscape next in today's Wall Street Beat. This is Bloomberg.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every trading day. Balance of Power. Live around the world only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Time now for the Wall Street Beat. Today we're looking at the fantastic work that our own deals team has been doing because they've been breaking news left and right. We're going to talk about the deals that are coming through the pipeline. Joining us now, Bloomberg's Liana Baker leads the deals team here in the United States. We had J&J cross the finish line. Honeywell, huge. You know, when you kind of look at what's happening to start the year, what are people talking about most?
Well, it's funny. Honeywell didn't announce a deal yet. We're expecting that on earnings they could announce a big breakup, which is really the trend among industrial companies, but not all industrial companies. It's funny, you mentioned J&J. 2023, they did a break off of their consumer business, and that gives them the firepower to do deals like they did this week when they bought Intracellular, which makes drugs that treat mental illness and schizophrenia and other depressive disorders.
Yeah, when I saw Intracellular, I was thinking about telecoms, but then I read deeper into your story. And is it widely expected that you're going to see far more deals this year? Because there was one Bloomberg opinion writer, Chris Hughes, who said, hold on, not so fast. But everyone else that we've spoken to on this show says we're off to the races.
So it's been a great 2025 so far, but M&A is a momentum game. You have to look when deals get announced. Are the stocks of the acquirers going up? If we see that happen on every deal, especially with these all-stock transactions, that's a sign that boards and CEOs are going to get more comfortable with acquisitions. But it's too early to say we can sustain this momentum all year. But certainly it's been great for advisors and M&A reporters because there's so much to write about. And also the first few days of the year, we also saw things like Getty Images find a merger partner with Shutterstock. And that was interesting because those are in the same space. So if we're seeing companies say, okay, I'm going to merge with a company that I directly compete with, that could be a game changer.
You know, one thing I think is so interesting is that the spin-off index for Bloomberg has just been soaring. It's 88% higher than 52 weeks ago. Constellation Energy on the top of that list, GE, Vernova. If you see companies pursuing spinoffs doing this well, then are more activists just kind of knocking at the door right now and saying the spinoff strategy works? Time to get organized, time to get leaner.
It might work, but then you have to consider, are all the targets used up? How many more spinoffs could really happen before, you know, for something to move the needle? For Elliott Management, which has a lot of money, but they put a $5 billion position into Honeywell. There's not many companies that could, you know, garner these huge investments. So we'll be watching that, and there's definitely targets out there to look at.
All right, Liana, I guess we're going to be seeing a lot more of you this year, which is good news for us. Liana Baker there runs the deals team for Bloomberg News. Coming up in the next hour, Katie Greifeld is up and at 'em in San Francisco for the JP Morgan Healthcare Conference. She speaks with executives of GE Healthcare and Regeneron today. This is Bloomberg.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working. Then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
what's the best piece of advice you would give to someone young who wants to make a difference, actually, in this world? In architecture or with something else?
Wow. I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Cheers and boos for President-elect Trump's controversial defense secretary pick, Pete Hegseth, as he entered the Senate chamber a half an hour ago for his confirmation hearing. Armed Services Committee Chair Roger Wicker.
Admittedly, this nomination is unconventional. The nominee is unconventional. Just like that New York developer who rode down the escalator in 2015 to announce his candidacy for president.
Ranking Democrat Jack Reed.
The totality of your own writings and alleged conduct would disqualify any service member from holding any leadership position in the military, much less being confirmed as the Secretary of Defense.
Just before the hearing began, that developer, President-elect Trump, posted his complete and total support on Truth Social. CBS News has learned Israel and Hamas have just agreed in principle to a draft for a ceasefire in Gaza and a hostage release. Our sources say if all goes well, the two sides will finalize the details this week, with implementation possible as soon as the weekend. Qatar's foreign minister spokesman Majid Al-Ansari confirms
the meetings that have taken place here in Doha are productive. They are positive, and we hope to hear some developments.
Sources tell CBS News hopes are high on all sides. Winds of up to 70 miles an hour could hit Southern California today, where wildfires continue to burn out of control. And there's a new fire in the mix. Correspondent Jonathan Vigliotti.
The so-called auto fire broke out overnight in neighboring Ventura County, north of Los Angeles, just 1 week after terrifying wildfires encircled L.A. with devastating consequences. Los Angeles begins this Tuesday by bracing for more.
A fast food chain taken to task for reaching out to minority teenagers.
McDonald's has been sued in federal court over its scholarship program for Hispanic and Latino high schoolers. Activists who oppose affirmative action filed the suit, alleging the scholarship program is racially discriminatory. McDonald's recently announced a change in its diversity, equity, and inclusion efforts, joining a growing list of big-name companies that have moved away from programs based on race and identity. Jim Priscilla, CBS News.
Rare glimpse into the life of a famous gangster.
I want him dead. I want his family dead.
New exhibit on Al Capone opens tomorrow in Las Vegas. Capone, played by Robert De Niro in The Untouchables. It'll be the first time the public will be able to view his favorite gun, which he nicknamed Sweetheart. It was a .45 caliber Colt 1911. Dow up 71. This is CBS News.
TradeMasters.com/free.
Hundreds of illegal miners in South Africa are trapped and dying of heat or starvation.
Another black body bag is hauled out of the disused gold mine, white-clad forensic teams loading it into a van. Volunteers have been lowered down to assess the situation.
They told us that about more than 400 people are still stuck down there, need to be extracted. And they also told us that the number of dead bodies is actually more than 100.
The police had blocked food and water from reaching the men as part of a crackdown on illegal mines, but the government's now ordered that to stop and for rescue operations to be mounted. Vicki Barker, CBS News.
An uninvited visitor at a supermarket in Chicago.
Watch out, watch out, watch out, watch out.
A customer captured the moment a police officer pulled a wild coyote out of an open refrigerated case at Aldi's after the animal wandered into the parking lot, then inside. A pair of officers used broomsticks to get him out. Deborah Rodriguez, CBS News.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation is still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. A special edition of Bloomberg Surveillance. David Gurr and Tom Keene with Lisa Mateo to the 12 noon hour. Joe Matthews scheduled to move forward with Kaylee Lines. We're now hearing the first and opening comments, I should say, from the Defense Secretary nominee, Pete Hegseth. We have a good idea, David Gurr, of these comments. They were released earlier.
Yeah, let's take a listen here as the nominee begins that opening statement, and we'll duck in here. We have a lot of great guests here coming up in the next couple of hours, but let's hear what the nominee has to say.
Are a misogynist. Not only that, you are a Christian Zionist.
And a protester in the hearing room in the Dirksen building as Pete Hegseth begins his testimony, and I should say the chair of this committee said none of that will be tolerated, no protests, no signs, so that protester being escorted out of the hearing room.
I would say here, as we look at the different news sources, a good 500 people, maybe even more, 700 people in the Dirksen building committee room. Senator Wicker of Mississippi speaking now. Let's try again. David, why don't you introduce him?
Pete Hegseth now, again in the Dirksen hearing.
My back. I pledge to do the same for all of you. It's an honor to come before this committee today as President Donald Trump's nominee for the office of Secretary of Defense. 2 months ago, 77 million Americans gave President Trump a powerful mandate for change, to put America first, at home and abroad. I want to thank President Trump for his faith in me and his selfless leadership for our republic. The troops have no better commander-in-chief than Donald Trump. As I've said to many of you in private meetings, when President Trump chose me for this position, the primary charge he gave me was to bring the warrior culture back to the Department of Defense. He, like me, wants a Pentagon laser-focused on lethality, meritocracy, warfighting, accountability, and readiness.
Another protester in the Dirksen hearing room as Pete Hegseth delivers his opening statement. The President Trump's nominee to be Secretary of Defense.
Watching the images here, for those of you on Bloomberg Radio across the nation, I'm going to say, making this up, 50 rows, maybe even 80 rows deep here in the more modern Dirksen building, not the imagery that we know from 40 and 50 years ago. Mr. Wicker trying to maintain control, the chairman of the Armed Services Committee.
Let me just say this. The Capitol Police are going to remove immediately individuals that are disrupting the hearing. I see a pattern attempted to be inflicted on the committee, and we're simply not going to tolerate that. You may proceed.
To bring back warfighting, if confirmed, I'm going to work with President Trump and this committee to, one, restore the warrior ethos to the Pentagon and throughout our fighting force. In doing so, we will reestablish trust in our military, addressing the recruiting crisis, the retention crisis, and readiness crisis in our ranks.
Another interruption here in the Dirksen hearing room. Senator Wicker, the chairman of the committee, admonishing the protester. I noticed some protesters wearing pink from Code Pink. There's a lot here resonant of what we saw during the Iraq War, a group based in Washington, D.C. that often interrupted hearings like this one, and the Capitol Police, Tom, moving swiftly to get these protesters out of that hearing room.
1 in 3, 4 people picking up one of the protesters, moving horizontally out of the door at the Dirksen building. Mr. Hegseth picking up a glass of water. I guess he's speaking again. It's a bit chaotic. Let's go back and listen to Pete Hegseth.
Reforming the acquisitions process, as you mentioned, Mr. Chairman, no more valley of death for new defense companies. Modernizing our nuclear triad, ensuring the Pentagon can pass an audit, and rapidly fielding emerging technologies. And number 3, we're going to reestablish deterrence. First and foremost, we will defend our homeland, our borders, and our skies. Second, we will work with our partners and allies to deter aggression in the Indo-Pacific from the Communist Chinese. And finally, we will responsibly end wars to ensure that we prioritize our resources to reorient to larger threats. We can no longer count on reputational deterrence. We need real deterrence. The Department of Defense under Donald Trump will achieve peace through strength. And in pursuing these America First national security goals, will remain patriotically apolitical and stridently constitutional. Unlike the current administration, politics should play no part in military matters. We are not Republicans. We are not Democrats. We are American warriors. Our standards will be high and they will be equal, not equitable. That's a very different word. We need to make sure every warrior is fully qualified on their assigned weapon system, every pilot's fully qualified and current on the aircraft they are flying, and every general or flag officer is selected for leadership or promotion purely based on performance, readiness, and merit. Leaders at all levels will be held accountable, and warfighting and lethality and the readiness of the troops and their families will be our only focus. This has been my focus ever since I first put on the uniform as a young Army ROTC cadet at Princeton University in 2001. I joined the military because I love my country and felt an obligation to defend it. I served with incredible Americans in Guantanamo Bay, in Iraq, in Afghanistan, and on the streets of Washington, D.C., many of which are with me here today. This includes enlisted soldiers I helped become American citizens, and Muslim allies I helped immigrate from Iraq and Afghanistan. Because when I took off the uniform, my mission never stopped. Now, it is true and has been acknowledged that I don't have a similar biography to defense secretaries of the last 30 years. But as President Trump also told me, we've repeatedly placed people atop the Pentagon with supposedly the right credentials, whether they are retired generals, academics, or defense contractor executives. And where has it gotten us? He believes, and I humbly agree, that it's time to give someone with dust on his boots the helm. A change agent, someone with no vested interest in certain companies or specific programs or approved narratives. My only special interest is the warfighter. Deterring wars, and if called upon, winning wars by ensuring our warriors never enter a fair fight. We let them win, and we bring them home. Like many of my generation, I've been there. I've led troops in combat. I've been on patrol for days. I've pulled a trigger down range, heard bullets whiz by, flex-cuffed insurgents, called in close air support, led medevacs, dodged IEDs, pulled out dead bodies, and knelt before a battlefield cross. This is not academic for me. This is my life. I led then, and I will lead now. Ask anyone who's ever worked for me or with me. I know what I don't know. My success as a leader, and I very much look forward to discussing my organization's successes at Vets for Freedom and Concerned Veterans for America. I'm incredibly proud of the work that we've done. But my success as a leader has always been setting a clear vision, hiring people smarter and more capable than me, empowering them to succeed, holding everyone accountable, and driving toward clear metrics. Build the plan, work the plan, and then work harder than everyone else around you. I've sworn an oath to the Constitution before, and if confirmed, I will proudly do it again. This time, for the most important deployment of my life. I pledge to be a faithful partner to this committee, taking input and respecting oversight. We share the same goals: a ready, lethal military, the health and well-being of our troops, and a strong and secure America. Thank you for the time, and I look forward to your questions.
Thank you very much.
Mr. Hegseth here with Senator Wicker of Mississippi as the chairman. There have been some protests, but protest-free there for 15 minutes. We are advantaged in our Washington News Bureau with reporters of experience. Mike Dorning has reported with our military from Ramadi, Fallujah, Mosul, and Sadr City, of course, in the Iraq War, and continue that work with the Chicago Tribune, and of course, many, many good years with Washington as well. David Gura and Mike Dorning. David?
Mike, great to speak with you, and I just want to get your thoughts on what we've heard thus far, yes, from the nominee, but also from the chairman of this committee, who had held his cards kind of close to the vest going into the hearing today when it came to whether or not or how fully he would support this nominee. What stood out to you thus far?
Well, what stood out is that Wicker seems to be fully behind him, and they've settled on this narrative that Hegseth will be a change agent, and that sort of ties him closer to Trump. But really what we want to be watching today is Joni Ernst and some of the Republican women who have held their cards even closer to the vest, and Senator Ernst initially sort of expressed some doubt about Hegseth. So we're going to see a big show with a lot of Democrats criticizing him and pointing out his problems with his record on management, on drinking, on allegations of sexual assault and womanizing. And you're going to see Republicans like Wicker defending him, promoting him as a change agent, promoting him as someone who will change the culture of the Pentagon to be more warrior-like. And then at the end of the day, we need to watch these moderate Republican women and see how they react.
Mike, on that issue of how Pete Hegseth, if confirmed, if made Secretary Hegseth would run the Pentagon, I was struck by one line he had there. He said, quote, "It's time to give someone with dust on his boots the helm." And one wonders how Lloyd Austin, the retired general, might think about that statement. Of course, he served in Afghanistan and Iraq as well. What do we know, both from what the nominee has said today and the documents he's tendered to the committee thus far, about how he would approach this job? Yes, there is a lot of happy talk here about leadership and learning from experience, but this is suffice to say, a very serious, important job. How would he approach it?
Well, I mean, he sort of argues that he will change the culture of the Pentagon. And the one thing he does bring that not a lot of former secretaries of defense have had is this TV performer experience. And, you know, as a performer, you know, he can be a cultural spokesman and try to rally people around him. So when he's saying he's a change agent and he argues that he, you know, would give other types of defense contractors a chance, that's something where he doesn't necessarily bring a lot of experience to. But this idea of changing the culture, his TV performer experience is, you know, would help him with that.
Mike Dorning, to me, there's a partition here of officers and gentlemen and maybe others, including enlisted types. And my focus is on the highest ranking enlisted type, the Sergeant Major of the Army. I believe that's Troy Black right now of the Marine Corps. Do you see a divide here in a Hegseth Pentagon or a different separation between officers and enlisted?
I'm not sure I really understand for sure what the difference would be in officers and enlisted. based on a Hegseth. He was a junior officer, and he did spend time in Iraq and Afghanistan. There are a lot of people who did. I think in general for defense secretary, people who have been more senior in ranks tend to sort of handle the same problems at a higher strategic level than a junior officer does. But, he would have some on-the-ground experience too, although all the senior officers had that junior officer experience.
Mike Dorning, thank you so much from Washington, reporting here today, lead editor in Washington for Bloomberg News. We're going to go to Terry Haynes, really anticipating it, but right now we do need to look at the markets. Here was CPI tomorrow, that important inflation report, the Dow up 200 points, and the VIX, a sprightly morning in almost a full point, 18.24. With the Bloomberg Business Flash, Lisa Mateo.
And this Bloomberg Business Flash brought to you by IBKR. Will U.S. oil production exceed 13.61 million barrels per day for November 2024? Well, you can trade your prediction at Interactive Brokers. Buy yes if you agree, no if you don't. Correct answers earn $1. Go to ibkr.com/forecast. All right, we've got stocks on the rise, and this is after U.S. wholesale inflation unexpectedly cooled in December. That was helped by a drop in food costs and flat services prices. Yeah, the producer price index for December rose 0.2% month over month. 0.4 was expected. And then year over year, the forecast was for 3.5%, came in at 3.3%. So we have the NASDAQ up 0.6%, 131 points, the Dow up 0.3%, and the S&P 500 up 0.4%. The 2-year yield, 4.37%. That's little change, and the yield on the 10-year, 4.79%. That's up 1 basis point. The Bloomberg Dollar Spot Index down 0.3%. Big banks on the earnings spotlight this week. Tomorrow it's J.P. Morgan Chase, Citigroup, Goldman Sachs, Wells Fargo, amongst others. And speaking of banks, there's a change in executive leadership. J.P. Morgan COO Daniel Pinto, he's going to retire at the end of 2026. He'll be replaced by Jennifer Piepzak, effective immediately. And a spokesperson for the bank says she does not want to be considered for the role of CEO. Meanwhile, Goldman Sachs expecting to boost bonuses for deal makers by up to 15%. That's after a bounce back in fees. That's according to Financial News London. And finally, Southwest Airline pausing hiring for management, headquarters jobs, and outside workers. It's a new round of cost cuts. For on-demand news 24 hours a day, subscribe to Bloomberg News now. Wherever you get your podcasts, I'm Lisa Mateo. That's a Bloomberg Business Flash. David and Tom.
Terry, please. Lisa, thank you so much. A special edition of Bloomberg Surveillance this morning with David Gura speaking clearly and me, my head spinning. There's just so much going on, Lisa, with all the lineup there. And of course, there's a Facebook headline out moments ago. I haven't even, did you know that the name is Meta?
It's Meta now. Meta planning to get 5% of its lowest performers, according to a memo.
Much like what Microsoft did a few days ago. Do I detect a trend here?
Yeah, perhaps in the world of big tech, a trend here among culling some of that staff. We, of course, focused on the hearing that's underway in the Dirksen building in Washington, D.C. Pete Hegseth, the nominee to be Secretary of Defense, being questioned now by the chairman of that committee, by Tom Wicker, the senator, and giving the nominee a chance to respond to allegations that have been levied against him about his behavior and comportment in the past. And Pete Hegseth saying he faced, quote, a coordinated smear campaign orchestrated in the media against us, orchestrated by the left-wing media.
And protest in the beginning, 1, 2, I believe I counted 3 people exiting the Dirksen building conference room. Terry Haynes provides perspective now with Pangea Policy, definitive on LinkedIn with good summaries of what's going on in Washington. Terry, I think we clearly saw these confirmation hearings are different with the protests. How different are they when they finally get down to a vote?
They're not very different at all. You know, what I would take from the Hegseth statement to illustrate this, frankly, is him stressing his partnership with the Armed Services Committee and with the Senate broadly, because as you and David were pointing out in the previous hour, you're going to have a defense budget that increases substantially under Trump from, I think you all said $850 billion to possibly to $1 trillion. And I've been predicting that for quite some time. You know, the question is his ability to partner. The question is beyond that. It isn't really so much about his prior life peccadillos or anything like that. He wants to be a change agent, but how does the change agent brief stack up again in a time where readiness in a multi-front conflict is the mission? in immediate readiness. And that's really what I think is going to get probed here more than anything else today. And
David, you alluded to that earlier.
Yeah, and Terry, I'm very curious about the picture of the Pentagon that this nominee is painting. So he talked about readiness, he talked about the Defense Department's budget, the need to implement all kinds of reforms. How salient are those criticisms? How important is it to execute that when you look at the state of the Pentagon today? Is it suffering from difficulty recruiting? Is it suffering from a budget that's not big enough in light of the numbers that you just cited a moment ago?
David, that's a really smart question, and not because that's what interviewees say when they're treading water. I'm not treading water here when I say, but my impression is, I'm not going to be an expert on the view of the forces, but my impression from talking to a lot of people who are in and around the forces is that the first couple of paragraphs of Hegseth's statement are designed to appeal directly to those folks, the in-service people, the people that actually do have dust on their boots. There is great concern beyond recruitment about the mission, about what the priorities are, and whether or not, for example, other considerations, including diversity, equity, and all the rest, while important, have subsumed the basic purpose of the fighting forces, and that's what Hegseth's really trying to get at. So, like it or hate it, there's. Right. It's not coded at all. It's right there in the front.
With us, Terry Haynes, and we continue with Mr. Haynes with Pangea Policy, a special edition of Bloomberg Surveillance. David Gura and Tom Keene centering on economics, the finance, the investment, the market open now with the Dow up 193 points. For Global Wall Street, I'd note the 10-year real yield, the inflation-adjusted yield is enjoying 2.33%. That is a lofty level. We continue with David Gura and Mr. Haynes.
Terry, I'm looking at how this hearing is being conducted, and there's some bickering back and forth now between the chair and the ranking member of this committee. Senator Reid of Rhode Island wanted to have multiple rounds of questions. Senator Wicker denying that request from his counterpart on the dais. There have been some criticisms here of the deepness or thoroughness of the FBI investigation into the nominee, into Pete Hegseth. Talk a bit, if you would, about how this hearing is colored by the majority the Republicans now have in the Senate, and how we're likely to see a response to that from Democrats on this committee and Democrats in the Senate more broadly.
Well, two things. Let me talk about the process first, and then the substance. The process, I think, is kind of standardized. Now, this is the first hearing in the new Congress with the new Republican majority. Wicker and Reid are both pros. These are not people who have just come to power, just come to chairmanships, and Wicker and Reid are bickering about the process and about how things are going to work. My understanding of this is based on what I've heard, which may be a little bit less than you've heard, is that he's trying to establish, Wicker is trying to establish standard process, and the tradition is you start with the chair and the senior member of the minority, and then you work down the dais on both sides. On the substance, I think the Senate has insisted upon a pretty standard bureau process all along. There is a wrinkle here where the chairman and the ranker are getting to look at more of the FBI files than the rank and file in the Senate. I think that'll be a little bit controversial with the rank and file, but frankly, the reason why that happens is to protect against leaks. So I think that's a minor wrinkle here. Generally speaking, this is all being done by the book.
Terry, as you talk to clients, what are they asking you about the direction of this Pentagon, what that direction would be under a Secretary Hegseth? We heard him talking a few moments ago about what seems like something we've heard in the past, a pivot to China, a new focus on potential conflict there, that potential adversary halfway around the world. What do we know about the direction of the Pentagon, the direction of military strategy, what that would be like under a Secretary Hegseth?
Well, I think two things. One is I think markets are not quite ready for the degree of refocus from Biden to Trump on geopolitics. The last few years, geopolitics from Washington has been soft-pedaled a little bit, and I think that's going to change greatly starting next Monday, and markets I think are ill-prepared for that. So that's first. Second, I don't think we yet know, frankly, and aren't going to know from Hegseth exactly what new forms the doctrine and the strategies are going to take. I think that's frankly because that's largely up in the air, and what these folks need to do is get their feet under them and get their briefings under them because they're not fully read in and won't be until next week.
Terry Haynes, I talked earlier about what President Trump's comments, and I'm speaking in a broad sense, of his upset over generals and admirals at the Pentagon, and I think Mr. Hegseth alluded to that in his opening comments. From where you sit, what is the divide between the brass of the Pentagon and the enlisted troops? Discuss that divide.
But a lot of what you hear from people below the brass, frankly, is concern about mission and focus, and concern that the brass are being pushed too much to be politicized, fair or not. And but that is a real thing out there. And what a lot of what Hegseth is saying this morning is that he intends to kind of get back to basics on that and remove a lot of those political filters. So. Right. That will be, by and large, I think, thought of very well by a group the enlisted group and beyond who think less of the brass and are concerned about the politicization.
David wants to get in here. I'm going to be quick on this. Terry Haynes, if we go from $800 billion up over $1 trillion in Pentagon spending, what will the new money be spent on?
I think it's going to be spent on two things: more of the same, firstly, and secondly, on three things really. Secondly, on a crash basis, I think you're going to see kind of additional drones and unconventional warfare, and thirdly, I think you're going to see new weapon systems go through the process much more quickly than the current very drawn-out process that really is a relic of the Cold War.
You're listening to special coverage on Bloomberg Surveillance of the confirmation hearing for Pete Hegseth, the nominee to be the next Secretary of Defense. Terry Haynes is with us. And Terry, I want to ask you, were I Tulsi Gabbard or Congressman Doug Collins, who was supposed to testify today, that hearing has been moved. What am I watching for? What does this hearing tell me about the approach from, yes, Democrats, but Republicans as well, to the president-elect's nominees?
I think what it really comes down to, David, is a test of seriousness. I think there's bipartisan concern, frankly, underneath the kind of partisanship, or Senator Wicker's support of Hegseth, for example. There's bipartisan concern about the ability of the Trump nominees, frankly, to handle the magnitude of the responsibilities that are in front of them. That's not a dissing of basic competence. What that is a concern that their backgrounds haven't yet prepared them for the depth and breadth of these sorts of jobs, and may undermine the seriousness of what Trump's proposing on a defense and national security basis. So these are hearings that I think are even more serious for future direction of United States national security and defense than you might think otherwise.
Well, just to ask you here, sort of where you see this leading after. Tom and I we were talking about when the vote is going to take place. I gather it's been scheduled for Monday. Describe the importance of this role, yes, to our government, but to the president-elect, to get Pete Hegseth confirmed, what that means to Donald Trump.
I think Hegseth, the conventional Washington answer about this is that, all nominees are very important, so on and so forth. My sense of Trump is different. My sense of Trump generally is that, Plan A doesn't work, then we'll do Plan B, and there will be a Plan B. And you can look into his first term for this, but you can look no farther than how quickly Gates was discarded and how quickly the new nominee was put into place, and how much better everybody felt about the new new nominee. They've committed to Hegseth. Hegseth hasn't disqualified himself over the last 2 months. That's important, and that's positive for Hegseth, frankly. But if Hegseth is confirmed, and my sense is this is very much a roll of the dice. If he's confirmed barely, and maybe with a Republican dissenter or two, and what that means for defense and for other contentious nominees like Gabbard and maybe Kennedy isn't good. But for the rest of the nominees, I don't think it matters a lot. They proceed to fail on their own merits.
Terry, thank you so much. Can't say enough about his coverage, and particularly, folks, go out to LinkedIn and see his complete notes. Agree or disagree, just always with terrific perspective. Mr. Haynes, with a bit of experience in Washington. Fisher of Nebraska now is beginning comments to Mr. Hegseth, and I guess we go back and forth. It's the same old, a Republican, a Democrat. And did you say that we have one round?
One round, it seems. Senator Reid's efforts to get more. Well, you're not going to get 9 rounds, but
TKO or whatever.
There you go. But we'll of course bring you the most salient parts of this hearing. We're looking forward to hearing questions from Senator Ernst of Iowa in particular, and Senator Warren, as well as our coverage continues here on Bloomberg Surveillance. Tom.
The Dow up 160 points. We continue to look at the markets with the VIX 18.53. Facebook to reduce their workforce. JP Morgan with management changes. From New York City, Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got stocks advancing, and this is after a miss on producer prices, which came in below expectations of both the headline and core ratings, and it really sets the stage for tomorrow's CPI report. That's expected to have ticked slightly higher from the previous month. We'll start with the NASDAQ up 0.1%, 27 points. The Dow up 0.3%, 161 points, and the S&P 500 up 0.1% or 10 points. The two-year yield at 4.38%. Little change. The yield on the 10-year 4.79%. And that's up 1 basis point. To commodities, oil slipped from a 5-month high. WTI crude down 1% at $77 a barrel. Brent crude at $80 a barrel. The Bloomberg Dollar Spot Index down 0.3%. And we have Bitcoin up nearly 2.5% at just above 96,000. That's pushing shares of MicroStrategy higher, up more than 2%. We go to shares of Eli Lilly. They're down 6%. It reported preliminary 2024 revenue missed estimates, and that was because of lower than expected sales of its weight loss and diabetes shots. Then you have shares of H&E Equipment Services. They're skyrocketing up 105%. United Rentals agreed to buy the company for $3.4 billion in cash. And finally, shares of KB Home. They're up more than 3%, and that's after its earnings per share revenue deliveries for the fourth quarter beat estimates. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. David and Tom.
Thanks so much, Lisa. Greatly appreciated. Shaheen of New Hampshire beginning her conversation with Mr. Hegseth. Question on this new politics, and boy, did we see it, David, with those protests early on in this conference today.
Yeah,
this confirmation hearing.
Pete Hegseth having some difficulty getting through that opening statement because of the quantity of protests, and Senator Tom Wicker, the chairman, clearly getting more and more agitated by how many protests there were in that hearing room.
And Gautam Mukunda knows that if I was at Yale School of Management, I'd be pulling a quality D- in his course right now, because my knowledge of the cabinet centers around the modern presidency of Abraham Lincoln. Of course, team of rivals, the political genius of Abraham Lincoln, Doris Kearns Goodwin, is iconic. And with picking presidents, Gautam Mukunda looks at picking cabinets. Gautam, how original would this cabinet be?
It would be original, as with everything Trump, completely unlike anything we've seen before. It's just thinking back the history of the Secretary of Defense, which goes back to the 1947 National Defense Act. I cannot think of a Secretary of Defense who is remotely as unqualified as Pete Hegseth. There's not even anyone in the same universe.
Bearing that in mind, describe the mammoth undertaking he would face if he is confirmed. So we talk about his unqualifications in broad strokes here as you bring them up. We see Republicans casting him as kind of a change agent in the mold of the man who appointed him to this job. What does he face as he walks into the Pentagon on day one, should he be confirmed?
Yeah, a change agent is desperately needed. The Pentagon needs to change more than just about any other government agency. The problem is, as we all know, not all changes are for the better, and so that's the concern here. But for what he wants to do, at a most basic level, the U.S. military has to reorient itself, not just from switching from focusing on fighting insurgencies in the Middle East to a high-intensity warfare, the old-school World War II-style high-intensity warfare. It also needs to reorient its geographic focus to where we're fighting essentially in Asia as opposed to Europe or the Middle East, although obviously Russia is still a threat we need to think about. And warfare, like anything else, away games are a lot harder than home games. If we were, God forbid, if we were to fight a conflict with China over Taiwan, we would be doing it in their backyard. They would have every conceivable advantage. And so it takes a very, very differently structured defense establishment to make that work. And we have not made that transition. We have not even come close to making that transition yet.
We have heard for decades and decades this call to audit the Pentagon. It is an impossible task for anyone to undertake. But I bring it up with some seriousness here because when we talk about reform of the Pentagon, it's something that looms large. There is a lot of ability for us to kind of pillory the department for how it spends money and how it contracts. How difficult would it be to change the day-to-day of the Pentagon?
Extraordinarily difficult. Many people have tried, and essentially no one has succeeded in the largest extent. When I was in the Pentagon, we're advising the Navy. I remember I used to walk around, and in the Army section there was a big sign-up saying, this was while we were in Afghanistan and Iraq, we are an army at war. And I thought this was the most devastating sign you could possibly put up, because what it meant was that you felt that people in the Pentagon had to be reminded, right? That's how different you are, how distant you are, and how insulated the Pentagon bureaucracy can be. The change that we're talking about, the Pentagon has more than 2 million employees. It has a budget, if you roll in sort of, affiliated costs of that, approaching $1 trillion. It covers the entire planet. No other institution in the world covers the planet the way the U.S. Defense Department does. And it has a civilian side sort of defense expertise that has really been eroded. One of the central reasons why contracting procurement in the Defense Department is such a catastrophe is that the program management skills that used to be part of the senior executive service were essentially driven out of the government over a couple of generations, where we instead shifted that burden onto the defense contractors, who ran wild with it. The biggest failure was a thing called concurrence, where we saw the catastrophe of the F-35 and the new aircraft carrier program, where they were built at the same time that they were essentially tested. And of course, when they failed the tests, all that building had to be redone, and it drove the cost of it.
Something like that, just as one story. Do you look at that as asymmetric, and that it was a Republican failure or a Democratic failure, or was that just an institutional failure?
It is an institutional failure. The two sides have failed in different and complementary and disastrous ways. Republicans have failed because they did not value expertise, and they kept slashing away at the civilian expertise on contracting, and relied on the contractors. Democrats have flipped on the other side. When Barack Obama was president of the United States, he could have made Richard Danzig Secretary of Defense. He could have put a real reformer in, and he did not choose to do that. Right? Like, there was a lot of, the Defense Department just isn't what we pay attention to. It's not what we're going to focus on. We're going to let it kind of do its thing without going in and getting into the details.
Senator Shaheen questioning the nominee now on comments he's made in the past about women in combat. Pete Hegseth is saying that his main concern here is readiness on the battlefield. When you look at all of the things that are dogging him or could be potential hurdles to him being confirmed here, Gautam, how much does this loom large? There are many members of this committee, women who did in fact serve in the military.
It's a big one. I feel like the issue with Pete Hegseth is there are so many different issues with him, each one of which is individually completely disqualifying, that they're kind of blocking each other, right? Like, you don't want someone who has a huge drinking problem. You don't want someone who doesn't like women in the military. You don't like there's everything compounding all at once. I wonder if people are unsure where to target their fire. But if you were a woman in the military, surely having a Secretary of Defense who says you shouldn't be there seems like a big problem.
Gautam, we're going to have to leave it there because we've got to do a market over here. Thank you so much for perspective. I can't say enough about the book, Picking Presidents, Gautam Mukunda, Yale University. Thank you so much for that today. David, did you know the markets are still open?
Still open.
It's amazing.
Yes, it's easy to be distracted by one thing or another, but from the J.P. Morgan news to the economic data this morning, there's been an awful lot going on.
A lot of news flow, and the major news flow for me is the 30-year bond. It used to be the benchmark before Guru was born. The 10-year is the benchmark, down 4.80%. But the 30-year bond lifts to 4.99%. We may burst through 5%. Did briefly the other day, but this has more of a feel to it, higher. And the 10-year real yield is 2.33%. So it's this, again, elevated yields in a market in recovery, David, is sort of the oddity of the moment.
Are you surprised by how little the market reacted to the inflation data that we got today?
No, I'm not. I think that Mike McKee is outlined that nicely, and that PPI and Stephen Stanley was
hugely valuable to have him here today.
Yeah, really valuable. And of course, your brilliant questions on inflation was just too much for me this morning. But the answer is PPI ain't what it used to be. It used to be like the world stopped. The world stopped for M1, M2, M3, like 3 p.m. in the afternoon. Gone. World used to stop for PPI. Gone. But not for CPI tomorrow.
Our special coverage here on Bloomberg Surveillance will continue in just a moment. Of course, watching the confirmation hearing of Pete Hegseth, President-elect Trump's pick to be the next Secretary of Defense, as we get through questions from members of that committee. Waiting for Senator Joni Ernst of Iowa, scheduled to question the nominee soon. She non-committal if she supports him or not. We will find out when she asks questions of Pete Hegseth right here on Bloomberg Radio.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney on assignment on this important political day in Washington to have Joe Matthew and Katie Lines at 12 noon, and now David Gura with us is a joy. We're following the markets, and right now, just to pause here with Cotton of Arkansas asking questions to Mr. Hegseth, we will go to Gillibrand of New York here. We think in a bit now. Cotton, a second lieutenant. Do you have to have military experience, David Gura, to be on Armed Services Committee?
You do not, but I was thinking as I look at these two in split screen, Tom Cotton, of course, an alumnus of Harvard University. Pete Hegseth, somebody who went to Princeton University. He talked earlier about joining ROTC as a Princeton freshman because his love of country. In a way, these two have very similar profiles, but of course, when Tom Cotton went into the Senate and pursued a career in government service, we saw Pete Hegseth go into running these two veterans organizations and, of course, going to Fox News, where he helmed the weekend show there as well. So some similarities among them. But as you say, Kirsten Gillibrand, junior senator from New York, will be an interesting one to watch as we sort of look for those who will more pointedly get at questions to the nominee about his record and his history.
The protests that we saw at the beginning, do you just assume now, David, that we'll see protests with other confirmation hearings, or does security start vetting people more? It's unprecedented. I don't remember this with Sam Ervin and Howard Baker.
We've seen it here and there since the wars in the Middle East have kind of kicked up in recent years. I remember when I first moved to Washington and George W. Bush was in the White House, there were regular protests like the ones that we've seen during hearings. I covered the 9/11 Commission, for instance, and Code Pink, who seemed to be organizing the protests that we saw this morning, was in its infancy, but was arranging protests very similar to the ones that we saw when I was there before. Look, no chairman wants to have his or her confirmation hearing derailed by something like that. And as I say, you sort of saw Tom Wicker, the chairman of this committee, getting more and more agitated as this continued over and over again. But Capitol Police, very expert at getting those protesters out of the hearing room, and Chairman Wicker showing no patience with having them protest while this hearing continues.
Let me look through the market right now and take a moment here before we hope to hear from the senator from New York. Equity markets lift now. I'm going to call it a fractional lift, with the Dow leading the way. The VIX sprightly, in a better statistic, the VIX 18.57, in from the angst of 21 a few days ago. Bitcoin, haven't quoted, churning here, 96,000 on Bitcoin. And yields are the story this morning, and they elevate up. The 30-year bond is a critical statistic, 4.99%, with a different move up than a few days ago. There seems to be a greater persistence to bond note in bill prices lower, in yields up, and you see it in the inflation-adjusted 10-year real yield, 2.33% in the 10-year real yield as well. In the currency markets, we pull back a little bit. I'm going to call it a mixed picture, but the euro under 103, 102.93. Tomorrow, and David, you'll be with me, I believe,
Indeed,
tomorrow,
I will.
which is a good thing. The CPI report, far, far more important than what we saw yesterday. Today, I should say.
It feels like yesterday, but we'll get those data tomorrow, and again, crucially important here to the Fed as it plots its path forward. I think having to revisit its path forward in light of these inflation data and the jobs data that we saw at the end of last week. Today, our focus shifts now to what's happening in Washington, D.C., this confirmation hearing for Pete Hegseth. And Tom, it's kind of shaping up in terms of the colloquies that we've seen. The questions and answers that we've seen have focused on what we thought would be hot-button issues. I'm struck by something that the senator had. Let's bring in Senator Gillibrand, Kirsten Gillibrand, junior senator of New York, now questioning the nominee, Pete Hegseth.
Thank you, Senator.
I have many concerns about your record, and particularly your public statements, because they are so hurtful to the men and women who are currently serving in the U.S. military, harmful to morale, harmful to good order and discipline. If you are saying that women shouldn't be serving in the military, and I'm going to read you your quotes, because the quotes themselves are terrible. You will have to change how you see women to do this job well, and I don't know if you are capable of that. So I want to press on these issues that my colleague Jean Shaheen brought up, because she said it so well. So first of all, you answered your questionnaire. Do you believe that any American who wants to serve in their country in the military and can meet objective standards set by the military should be allowed to serve without limitation. You've said yes to that question. But then in all of these other circumstances, you've denigrated active duty service members. We have hundreds of women who are currently in the infantry, lethal members of our military serving in the infantry, but you degrade them. You say, we need moms, but not in the military, especially in combat units. So specific to Senator Cotton's question, because Senator Cotton was giving you layups to differentiate between different types of combat. And specifically, as Secretary, would you take any action to reinstitute the combat arms exclusion for female service members, knowing full well you have hundreds of women doing that job right now? And the standards, your 2 mile run, Tom, is about the Army Combat Fitness Test. It is not the requirements to have an MOS 11 Bravo, which is the infantry. These are the requirements today for people serving in the industry, men and women. They are gender neutral, and they are very difficult to meet. They have not been reduced in any way, and our combat units, our infantry is lethal. So please explain specifically, because you will be in charge of 3 million personnel. It is a big job. And when you make these public statements, and I get you were not Secretary of Defense then, I get you were on TV, I get you were helping veterans, I get it was a different job. But most recently, you said this in November of 2024, knowing full well you might have been named as Secretary of Defense. So please explain these types of statements, because they're brutal and they're mean and they disrespect men and women who are willing to die for this country.
Well, Senator, I appreciate your comments. And I would point out, I have never disparaged women serving in the military. I respect every single female service member that has put on the uniform, past and present. My critiques, Senator, recently and in the past, and from personal experience, have been instances where I've seen standards lowered, and you mentioned 11 Alpha, 11 Bravo, MOS, places in units, and the book that has been referenced multiple times here, The War on Warriors. I spent months talking to active duty service members, men and women, low ranks, high ranks, combat arms and not combat arms. And what each and every one of them told me, and which personal instances have shown me, is that in ways direct, indirect, overt, and subtle, standards have been changed inside infantry training units, ranger school, infantry battalions, to ensure that
give
commanders
me one example. Please give me an example. I get you're making these generalized statements.
Quotas to have a certain number of female infantry officers or infantry enlisted, and that disparages those women.
Commanders
who are
do not
capable
have to meet
of
quotas for the infantry. Commanders do not have to have a quota for women in the infantry. That does not exist. It does not exist. And your statements are creating the impression that these exist, because they do not. There are not quotas. We want the most lethal force. But I'm telling you, having been here for 15 years, listening to testimony about men and women in combat and the type of operations that were successful in Afghanistan and in Iraq, women were essential for many of those units. When Ranger units went in to find where the terrorists hiding in Afghanistan or in Iraq, if they had a woman in the unit, they could go in, talk to the women in a village, say, where are the terrorists hiding? Where are the weapons hiding? And get crucial information to make sure that we can win that battle. So you cannot denigrate women in general, and your statements do that. We don't want women in the military, especially in combat. What a terrible statement. So please, do not deny that you've made those statements. You have. We take the responsibility of standards very seriously, and we will work with you. I'm equally distressed you would not meet with me before this hearing. We could have covered all of this before you came here, so I could get to the 15 other questions that I want to get to. So women, you have denigrated. You have also denigrated members of the LGBTQ community. Did you know that when Don't Ask, Don't Tell was in place, we lost so many crucial personnel, over 1,000 in mission critical areas. We lost 10% of all our foreign language speakers because of a political policy. You said in your statement, you don't want politics in the DOD. Everything you've said in these public statements is politics. politics. I don't want women. I don't want moms. What's wrong with a mom, by the way? Once you have babies, you therefore are no longer able to be lethal. I mean, you're basically saying women, after they have children, can't ever serve in the military in a combat role. It's a silly thing to say. It's a silly thing to say, beneath the position that you are aspiring to. To denigrate LGBTQ service members is a mistake. If you are a sharpshooter, you're as lethal regardless of what your gender identity is, regardless of who you love. So please know this to be a true statement. So you say it was a political thing. You say it undermined us, social engineering. I don't know why someone having to publicly say or not publicly say who they love is social engineering. I think having that policy in the first place was highly problematic. And as you said in your statement, do you agree anybody should be able to serve in the military if they meet the standards?
Senator, as the president has stated, I don't disagree with the overturn of Don't Ask, Don't Tell.
Great, because I don't want you thinking, can't serve if you're a mom, can't serve if you're LGBTQ, and then last, can't serve if you're a leftist. The statements you said about people who have views differently than you, that we're the enemy, are you saying that 50% of the DOD, if they hold liberal views or leftist views or are Democrats, are not welcome in the military? Are you saying that?
Senator, I volunteered to deploy to Afghanistan under Democrat President Barack Obama. I also volunteered to guard the inauguration of Joe Biden, but was denied the opportunity to serve because I was identified as an extremist by my own unit for a Christian tattoo.
Thank you very much. Senator Gillibrand, you held up a document and referred to it during your questioning. Would you like that entered into the record?
There may be one without my marks.
Okay, we'll delete.
We'll submit a clean copy.
Without objection, that will be admitted at the point of your question. And I would like to enter into the record at this point a letter of support from retired Air Force Colonel Melissa Cunningham.
Well, the colloquy there between the chairman of the
Mr.
committee, Roger Wicker, and the junior senator from New York, Kirsten Gillibrand, who was just questioning the nominee Pete Hegseth. And Tom, what stood out to me there was the effective use there by the Democratic senator reading quotations that have been controversial, to say the least, by Pete Hegseth to the nominee himself.
And mentioning his book, which I think is important, The War on Warriors. Joining us now, Joe Matthew, who will pick up our complete coverage of this and the markets, of course, the red and green on the screen right now. But Joe Matthew, at 12 noon, you're going to come back with Kaylee Lyons. I look at chapter 12 of the nominee's book, The War on Warriors, Harvard in Generals, a love story. There's a culture war going on here, Joe Matthew. Is there also a distinction here of generals and admirals versus the second Trump administration?
Yeah, I think that you've been wise to draw that line today, Tom, as part of the bigger picture and what we hear just from MAGA in general, the distrust in many cases when it comes to the top brass leading the Pentagon, as we discussed this morning. This is an individual, Pete Hegseth, who has promised on day one to fire the chairman of the Joint Chiefs. C.Q. Brown is, of course, an accomplished airman who is also a man of color, and this brings us back to the idea of culture at the Pentagon that he's been talking about. Kirsten Gillibrand, we knew, was going to work over Pete Hegseth. Jean Shaheen was very interesting to listen to as well. This is the senator from New Hampshire who has been part of the Armed Services Committee and in the circle here for some time. She accused him of an 11th hour conversion. And I think when you listen to the 7 female Democrats on this panel, they have tasked themselves with bringing this to light today. Right. Of course, for every criticism that they bring, you hear a letter of support put in his behalf. Right. But let's wait for Elizabeth Warren. She's already released her questions here. I'll tell you one thing, guys. When it comes to optics, I've never seen a congressional hearing before where a Capitol police officer was standing directly behind the witness to face the room for protesters. They carried about 4 of them out already. I've never seen that behind a witness on
David, I think this is important, and this goes back to conversations with Senator McCain over the years with his heritage of military service. General Brown of the Joint Chiefs in the Air Force had a father who rose to colonel and a grandfather who enjoyed time in Saipan in World War II. I'm being facetious there. And this is a 3rd generation servant of our military that I guess they're going to toss. David,
I mean,
toss him out day one?
It speaks to the warped prism through which we are looking at public service in this country today, because by all measures, the general service has been extraordinary. You talk about the heritage, the family heritage that he has in the military, and it's hard to imagine someone not tipping his hat to that. Joe, let me ask you just about the way that the preliminary part of this unfolded, and we heard there from Senator Gillibrand, we heard it from Senator Shaheen as well. Neither of them had the opportunity to meet with the nominee one-on-one. And what does that tell us about the way that the transition team, the way the president-elect is approaching this process? If I say, this is not how it usually goes. In the past, when a president-elect has nominated someone, he or she makes the rounds on Capitol Hill, not skipping all of the Democratic offices or all the Republican offices, you're going into all of them.
That's right. You know, Norm Coleman, who introduced him today, was his Sherpa walking him around these meetings, and he did dozens of them over the course of weeks. He could have met with every member on this panel and still had time to go back around with Republican members. They are reminding him of that now. Whether it actually jeopardizes his chances of confirmation is another question, but I wonder if that affects the way some of the other nominees, specifically Tulsi Gabbard and RFK Jr., interface with Democrats. It's something they're going to have to do. He could have avoided potentially that confrontation just now with Kirsten Gillibrand if he'd sat down in her office.
I think, Joe, you're much more in the trenches on this than me and David, in that these indecisive GOP senators, which ones, or which one, I should say, are you focused on as we go through the food chain from Reed and the gentleman from Mississippi on down? Which is the senator Joe Matthews going to lean forward and listen to?
Well, I'll tell you what, I just was listening very closely to Tom Cotton, and I think that he's going to try to carry the mantle here, the MAGA mantle, a little bit, and try to give Pete Hegseth some breathing room. They'll likely do another round. We'll see if that happens as they each try to get a swing at this. But Tom Cotton is speaking the language that Pete Hegseth was speaking in the interviews that they're referring to here when it comes to women in combat and some of the more cultural issues. But let's remember there's more at hand here, Tom, as well. His comments on the nuclear triad at the very beginning of this hearing are as important as anything that you're going to hear today when it comes to procurement and when it comes to essentially reforming the way the Pentagon spends your money. He says if our enemies are not horrified, if they're not scared, we have an emergency. And he sees the triad as not being a deterrent now, talking about a lot of different weapons programs, B-21 and so forth. What does that mean for our sub-fleet? What does it mean for the future of carriers? That's some of the content that I want to hear about from somebody who's being asked to run the Pentagon.
You know, our colleagues pointing out the fact that as he talked about nuclear recapitalization, it's a long-term, multi-service endeavor. It would be quite hard for somebody coming into this job to change it. And I think what that highlights, Joe, and I'd love for you to talk a bit about this, is sort of what he thinks he would be able to do versus what he can do. And I think, you know, over the course of the morning, Tom and I have talked with any number of guests about how mammoth an undertaking it is to run this department, the largest department. So many people who work for it. He evinces a naivete, shall we say, about sort of ways in which this is working. We're sort of seeing that come up, nuance and naivete come up over the course of this hearing.
Well, this is all true. And that's what these are all about. That's why we do them out loud. And in terms of what he wants to do to help reform something as gargantuan as the nuclear triad, let's remember who's across the Potomac. This is really not going to be Pete Hegseth's department to run at will. He's going to be, of course, following the lead of Donald Trump. And when you hear him talk about issues like this, it's not always, frankly, the most comprehensive. I don't know where Donald Trump is on the nuclear triad. He's never said that, and he's never been asked about it.
This is the heart of the matter. Joe, this is you've nailed it. This is the heart of the matter. Folks across the nation on your commute on YouTube, on Bloomberg Podcast, Matthew and Gura with us. I'm going to stop the show because we're going to go to Stephen Dennis, who's smarter than me. But we're going to stop the show now. The perception is his State Department is cozy little, foggy bottom, you know, Tillerson was in charge in that. And the Pentagon is this ginormous, sprawling thing. David Gura, can you compare and contrast any president running state versus a president running defense?
Look, I think that obviously the Defense Department is larger than the State Department, and I think you could look at who President-elect Trump has picked to run the State Department. Yes, Marco Rubio has a long history of working on the Foreign Relations Committee and engagement with international affairs. I think that's important, but to pick up on something that Joe said a moment ago, and I'm going to let Joe jump in here in just a sec, one wonders who's really calling the shots here, and is Senator Marco Rubio presumably turned Secretary Marco Rubio going to be able to call a lot of foreign policy shots? I'm not sure that's going to be the case. And Joe, I'd be eager to hear from you if your sense is the same. That yes, he knows these issues, he's engaged with them, but the direction here is going to come from the top, maybe more so than it has during this administration.
Yeah, just like every reporter in town, they all wake up every morning and look at Twitter to see what the boss said overnight and what's going to be the priority today. But I think, Tom, maybe where you're going a little bit is an agency that runs itself more than the diplomats in Foggy Bottom. And that's something that Donald Trump and Pete Hegseth, I guess to his credit, have said that they want to stop. At the same time, we're talking about the first $1 trillion defense budget in history likely to come out of this Congress. How's that money going to be spent? Does this person who's being interviewed right now have the answer to that?
This is wonderful, and Joe Matthew, with all of that experience, to continue our coverage at 12 noon today as this confirmation hearing moves forward. When Stephen Dennis writes, I lean forward. He has had more lunches and cold dinners in the Dirksen cafeteria in the basement of the building than anyone I know. He is our Senate reporter. Stephen Dennis, forget about my questions or even David Gura's. What's the backstory of this confirmation hearing in the halls of the Dirksen building?
Yeah, I think this is just a knockdown, drag-out fight between the Democrats and the Republicans here. You know, normally defense secretary jobs are love fests. Everybody wants to get in good with the new defense secretary and the big budget that they command. This is, you're seeing the Democrats really come out hard at Hegseth. You know, Jack Reed setting the tone at the top, saying that he doesn't think he's qualified to take on this job, doesn't have the experience, has a raft of personal problems and accusations against him that he feels like he has not responded to. And it just continued from there. You're seeing some of the women Democrats on the committee, Kirsten Gillibrand, going very hot against Hegseth on his previous opposition to women in the military and combat roles. And Hegseth is having a hard time sort of parrying that. And he's, I don't feel like Hegseth is really trying to appeal to Democrats at all here. He's really shoring up the Republican votes he needs. I don't think he's expecting to get any Democratic votes. And this is just not the way things are normally done when you have a defense secretary. Right. That's normally the easy pick here.
I mean, David Gura, what's important here is coming up is Ernst of Iowa. And like the chairman, Quinn, the chairman of the Joint Chiefs of Staff, she's ROTC Iowa State. I mean, this is some people with some tangible, every path is different. Yeah. But Joni Ernst is going to come up here with that ROTC experience from Ames, Iowa.
She has that experience, and regrettably, she's also a survivor of sexual assault, and that's germane in this circumstance as well, given what we've learned about Pete Hegseth, allegations made against him. And Steve Dennis, let me pick it up from there and just ask you, we were kind of surprised by the degree to which Roger Wicker, the chair of this committee, expressed support for the nominee. He hadn't done that very fully before this hearing. What are we expecting to hear from the senator of Iowa when she begins her colloquy with the nominee here in just a few minutes' time?
I'm going to be very curious to see what tone she strikes. Her initial tone on this nomination was chilly. She didn't like talking about him in the hallways. When she had a sort of a chilly statement after their first meeting, she got pummeled on social media, tens of thousands of comments, mostly ripping her. Radio host talking about potentially primarying her next year in her reelect. And so she's had a ton of pressure. She ended up seeking a second meeting, having a much warmer statement. So we'll see, but I don't think right now people are expecting Ernst to go hard at him. But I do think he's going to have to do a better job of clarifying his statements on women in the military at a minimum.
And to both of you as pros, David, pick it up here with Stephen Dennis. She took 51.7% of the vote in 2020. This is not a Republican from the Deep South. This is a Republican. I mean, David, the heart of the matter is, could she get primaried?
It's a great question, Tom, and I think we're seeing kind of a new politics, maybe not brand new, but a new politics kind of taking hold here on the Hill. And Stephen, to that point, I mean, what is the way that this hearing is proceeding say to you about how these other nomination hearings are going to proceed here in the week ahead? Tomorrow, an exceptionally busy day on Capitol Hill.
Yeah, I mean, I think Rubio's going to be a bit of a love fest. He already has the backing of Democratic leaders. Dick Durbin says he plans to vote for him. I mean, it's going to be sort of some of those hearings where I think there's going to be a lot of agreement and happy talk. And then you're going to have some tougher hearings. Pam Bondi for Attorney General, she's certainly going to be confirmed. It's just a question of, can she get some Democratic votes? And I think a lot of Democrats are worried about pardons of January 6th defendants. They're worried about how she'll run that department. Kash Patel at FBI, going to have a very tough hearing. That's yet to be scheduled. Tulsi Gabbard is going to have potentially bipartisan problems, given some of her past statements on Syria and Russia. So there's going to be some contentious hearings to come. But then you got people like Scott Bessent coming up on Thursday, where, you know, he is certainly going to be confirmed, but everybody, certainly our audience, is going to be on pins and needles to hear what he says about interest rates, about tariffs, about tax policy going into, you know, a very fraught year where those interest rates have been going up.
Right, Steve, well, we got you here. And of course, we're looking at these hearings with Joni Ernst of Iowa coming up, Mr. Blumenthal of Connecticut speaking right now. Stephen Dennis, how's Mr. Thune doing? What's the Dennis report card on the leader from the Dakotas?
So right now, you know, yesterday he had a bit of a flub where his staff started his fireplace. Probably hadn't been used in a number of years, and they apparently didn't open the flue properly, and it was literally smoking.
This is why I love Stephen Dennis, folks. This is going to be a Pentagon budget.
Amazing.
Do you think they'll spend $5 or $6 million cleaning the chimney? Yeah. Bring in Dick Van Dyke and the people to clean the chimney.
Chimney.
What happened, Stephen Dennis?
I do think. I mean, it did take a few hours to clean out that smoke, but I do feel like Thune is under a ton of pressure from the president and the president's supporters, who have not always had a great relationship with Thune. He's not really a MAGA Republican. He's more of an establishment type, but he has been talking positively about the president's nominees, about trying to confirm them quickly. So he's under pressure to deliver on that. In the meantime, you know, there is no good plan right now on how to enact the president's agenda. Lots of fights over reconciliation, taxes, spending, and they are not ready.
This is great. Every senator doesn't get a fireplace, do they?
Report, yeah.
I don't think so. Stephen Dennis, thank you so much for your work. Really, 7 days a week, leading our congressional and Senate coverage as well. Tom Keene and David Gura, a special edition of Bloomberg Surveillance. So much going on with red and green in the markets and different investment news. Yields are higher. That's the headline today for those of you of Global Wall Street. I got a 4.99 on the 30-year bond, watching that carefully, of course, folding into mortgage rates. But we are focused on these hearings with the chairman speaking right now. David Gura, we await the senator from Iowa.
Yeah, I just look at sort of what we've touched upon over the course of the hearing thus far, and obviously Senators Shaheen and Gillibrand focusing on remarks that Pete Hegseth has made in the past about women in combat. Kirsten Gillibrand effectively sort of reading from writings from Pete Hegseth in the past about that, calling them reprehensible and having him respond to them. Now, Senator Ernst, the gentlelady from Red Oak, Iowa, with her questions for the nominee, Pete Hegseth.
By Mr. Mark Lucas, who is a fellow Iowan and Iowa Army National Guard member. Mr. Lucas and I served together in the Iowa Army National Guard. He succeeded Pete Hegseth as Executive Director of Concerned Veterans for America. And in his letter, Mr. Lucas says that Mr. Hegseth, quote, laid a strong foundation that postured CVA for long-term success, end quote. And that Mr. Hegseth, quote, continued to be an invaluable asset to both me as a leader and the organization, end quote. So I would ask for unanimous consent to enter this Washington Times article and the letter from Mr. Mark Lucas into the record.
Without objection.
Okay, thank you, Mr. Chair. Good morning, Mr. Hegseth, and thank you very much. I appreciate your service to our nation. It's something that I know you are very proud of, and it is something that we have in common and that we share. You and I have had many productive conversations. And just for our audience, we have had very frank conversations. Is that correct, Mr. Hegseth?
Senator, that is a correct characterization.
You know that I don't keep anything hidden, pull no punches. My colleagues know that as well. So I do appreciate you sitting down and allowing me the opportunity to question you thoroughly on those issues that are of great importance to me. Just to recap those issues, 3 that are very important. One is the DOD and making sure that we have a clean audit. The second is women in combat, and we'll talk a little bit more about that in a moment. And the third was maintaining high standards and making sure that we are combating sexual assault in the military. Okay, so Mr. Hegseth, I'm going to address the issue because this will tie into some of the financial concerns that have been raised here as well. And it's why, you know, I, trusting my fellow Iowan, asked for unanimous consent of his letter to go into the record. But like me, a lot of Iowans are really, really concerned and upset about the wasteful Washington spending and of course, in our Pentagon. It's an issue that I have been combating for years. So there's significant room for greater efficiency and cost cutting within the department. And the DOD is the only federal agency that has never passed an audit. As the Senate DOJ caucus chair and founder, that's unacceptable to me, and it should be unacceptable to you as well. So I appreciate that you mentioned that in your opening statement. What are those steps that you will take to ensuring the Pentagon has a clean audit by the year 2028?
Senator, I appreciate your work on this topic, which you've been involved in for a long time. You mentioned Concerned Veterans for America. I just want to clarify. We have very generous donors who set a very clear budget that we stuck to every single year. So the latitude there was restricted, and we worked very hard and diligently inside it. You've also been a leader on the Pentagon audit for a very long time. I think when we met, Senator, I said 2014 was the first year. We discovered a 2013 op-ed I wrote about the need for a Pentagon audit because an audit is an issue of national security and frankly, respect to American taxpayers who give $850 billion over to the Defense Department and expect that we know where that money goes. And if that money is going somewhere that doesn't add to tooth and instead goes to fat or tail, we need to know that. Or if it's wasted, we need to know that. So I think previous secretaries of defense, with all due respect, haven't necessarily emphasized the strategic prerogative of an audit. And myself, my deputy SecDef, and others already know that a Pentagon audit will be the comptroller, others central to ensuring we find those dollars that can be used elsewhere legally under the law inside the Pentagon. So you have my word, it will be a priority.
Okay, thank you. Okay, moving on to women in combat, and I had the privilege of serving in uniform for over 23 years. Between our Army Reserves and our Iowa Army National Guard, did serve in Kuwait and missions in Iraq. And so it is incredibly important that I stress, and I hope that if confirmed, you continue to stress, that every man and woman has opportunity to serve their country in uniform and do so at any level as long as they are meeting the standards that are set forward. And we talked about that in my office. I do believe in high standards. Now, I was denied the opportunity to serve in any combat role because I have a lot of gray hair. And the policy has changed since then, okay? So I've been around for quite a while. But for the young women that are out there now and can meet those standards, and again, I'll emphasize they should be very, very high standards. They must physically be able to achieve those standards so that they can complete their mission. But I want to know, again, let's make it very clear for everyone here today. As Secretary of Defense, will you support women continuing to have the opportunity to serve in combat roles?
Senator, first of all, thank you for your service, as we discussed extensively as well.
It's my privilege.
And my answer is yes. exactly the way that you caveated it. Yes, women will have access to ground combat roles, combat rows, given the standards remain high, and we'll have a review to ensure the standards have not been eroded in any one of these cases. That'll be part of one of the first things we do at the Pentagon is reviewing that in a gender-neutral way, the standards, ensuring readiness and meritocracy is front and center. But absolutely, it would be the privilege of a lifetime to, if confirmed, to be the Secretary of Defense for all men and women in uniform who fight so heroic. They have so many other options. They decide to put their right hand up for our country, and it would be an honor to have a chance to lead them.
Thank you. And just very briefly, we only have less than a minute left, but we have also discussed this in my office. A priority of mine has been combating sexual assault in the military and making sure that all of our service members are treated with dignity and respect. This has been so important. Senator Gillibrand and I have worked on this, and we were able to get changes made to the Uniform Code of Military Justice to make sure that we have improvements and on how we address the tragic and life-altering issues of rape, sexual assault. It will demand time and attention from the Pentagon under your watch if you are confirmed. So as Secretary of Defense, will you appoint a senior level official dedicated to sexual assault prevention and response?
Senator, as we have discussed, yes, I will.
Okay, and my time has expired. Thank you for your answers.
Senator Hirono.
Thank you, Mr. Chairman.
We say good morning, Tom Keene and David Gura. What'd you think of that, David? I really thought almost a monologue, it seemed. We didn't hear much from
the there
nominee.
were far fewer fireworks than I thought there would be, and just picking up on what we were talking about with Stephen Dennis, our colleague in Washington, before that colloquy began. Joni Ernst, who, as she says, has served in the military for over 23 years in the reserves and the National Guard overseas, and also is a survivor of sexual assault. I think we were expecting perhaps her to engage with those topics a bit more in a more forceful way with the nominee. And Tom, that didn't happen. I mean, she asked this question at the end: would he be in favor of having a senior level official dedicated to sexual assault prevention response in the Pentagon should he be confirmed? He said, yes, I will. And she alluded to the fact that there have been several conversations. I think she characterized them as productive and frank conversations between her and Pete Hegseth. Perhaps they were more heated than what we saw on display there, and that's why this wasn't as heated. But I think it'll take a lot of people by surprise, given how many folks thought that she was going to be perhaps the one Republican vote that he wouldn't be able to get here in this committee.
The Democrat Hirono of Hawaii is now questioning the Senate nominee. We welcome all of you across the nation and internationally as well. Of course, on YouTube, it's our new distribution. Subscribe to Bloomberg Podcast after your commute. After, if you're Christopher Smart, after you do your work at Arbroath. But the bottom line is we're on YouTube. It's a new source of distribution. We're excited about it. Red and green on the screen. An important headline from Los Angeles. This is from the Los Angeles Sheriff, now reporting, I want to make clear, this is not dead, this is missing in this disaster. 24 people missing near the Altadena Eaton fire, and 6 in Malibu near the Palisade fire. David, again, those are missing and not dead, and you hope you'll find some of those missing, to be optimistic.
Absolutely, and you were getting to how busy the news flow has been this morning as we pay attention, of course, to what's happening on the West Coast and train our attention on what's happening on the East Coast. And you mentioned one Christopher Smart just a moment ago, a former special assistant to the president who served from 2013 to 2015, now with the Arbroath Group. And Mr. Smart, great to have you with us, and I'd love to just get your thoughts on, yes, how this particular hearing has unfolded, but what it tells us about public service in this Washington at a moment of transition, the way that this nominee has been treated, is being treated, and the way that the president-elect and his transition team are approaching this process of advise and consent.
Well, I think at every new transition, every president faces a different environment and a different approach to this advise and consent process. I do think, looking at this particular nominee, and remembering all the way back to when President George H.W. Bush nominated Senator John Tower, a defense expert and veteran, who famously was rejected because of accusations over his alcoholism and again, what in the day we used to call, or was called, womanizing. This is a nominee. Clearly, I think when we saw the first opening statement from Senator Ernst, who seems to be sailing his way through to confirmation, and it's hard to see what is going to stand in his way right now, in spite of what are likely to be a continued set of sharp questions from the Democrats.
Christopher Smart, you're one of the most qualified people. I mean, the title here is former special assistant to the president for international economics, but you've got a sense of geopolitics and the defense extension of America with your decades at Barings. And I'm not going to mince words, Dr. Smart. It's just as simple as this. Will the generals and admirals rally around this Secretary of Defense?
Oh, I think they will. I think most of them, wish that these political sideshows would go away so that they could get on with the business of defending our country and ensuring our national security, as they have always done through one Secretary of Defense after another. I mean, I think the real secret here is that no single Secretary of Defense is going to inflict significant change on the behemoth that is the Pentagon. One secretary after another has tried to make it more efficient, to make it more transparent, to get that audit. It is not an easy thing, and no single person is going to be able to do that.
And Chris Smart nails this, David Gura. This is the heart of the matter. The fact is the president-elect feels he can change the Pentagon. That's a fact.
He does. I think the open question is, and I'd love for Christopher Smart to chime in here, how much does he plan to change it, or think it can be changed, or force change on it? All through the morning, Chris, we've been talking about the degree to which there's sort of a script here for this nominee, should he be confirmed to manage this huge institution. Do we have a sense from him, from the president-elect, about what actually, notionally, would change at the Pentagon were he to be confirmed?
I think that's a very good question. I'm not sure we've had anything other than we're going to make it better from the president at this stage, or from the nominee to be Secretary of Defense. In finance, the most powerful force in nature is compound interest. In Washington, the most powerful force in nature is bureaucratic inertia. And I think it's very, very hard for a single person at the top to change that without, real legislation and a thoughtful plan about how we're going to do these things differently, how we're going to allocate money differently, when everybody wants to have a finger in the pot and everybody wants to have a hand on the lever.
We're back to where we were a few years ago. That is, looking at social media for indications from the president-elect about what he might do. A lot of it is bombast. Some of it are policy pronouncements. Today, he indicates that he wants to create an external revenue service, as he puts it, to collect our tariffs, duties, and all revenue that come from foreign sources. We'll be charging those that make money off us with trade, and they will start paying finally their fair share. Drawing from your experience at the Treasury Department, we've talked a lot about the Defense Department, the direction that it might take. Your sense of what that looks like under a Scott Bessent, should he be confirmed here a little later in the week? I'm struck by how motley a crew it is when you look at the economic team that the president-elect has put together. Your sense of the direction when it comes to, yes, the IRS, perhaps the External Revenue Service, should it be created here by this president-elect, and the Treasury Department more broadly?
Well, the Treasury Department, as you may know, used to be in charge of the Coast Guard, because the Coast Guard would collect a lot of these tariffs as ships would come into our ports, and tariffs were a more important part of our revenue mix. I don't think anybody who seriously looks at this issue believes that tariffs are going to represent a large part of our new revenue stream to cover any deficits that we have. First of all, if there is a tariff that is inflicted, that is imposed on a particular good, people are going to find ways to find an alternative. And so I'm not sure what the president-elect has in mind by creating this new service. Whatever it is, probably isn't going to move the needle very much.
Christopher Smart, you have parchment in history from Yale. I assume you had the honor of lectures with Jonathan Spence, the giant on China. And then at Columbia,
I have a book right behind me, one of his.
Yeah, I'm sure you're one of them, and you're the only person. I had the honor of interviewing him once with Orville Schell years ago, and I said to him, I've actually read the book cover to cover, and he said, there's only like 12 people that have. It was like 850 books. This is the giant Jonathan Spence on China. Christopher Smart, as Nick Burns steps aside as ambassador in China, your thoughts on how President Trump must address Beijing?
well, must or what he will do, or it's hard to kind of differentiate between the two. I mean, I think we in the United States and the Chinese government clearly have to figure out a new kind of set of rules for this superpower rivalry that is not going to go away anytime soon. And sort of as the United States and the Soviet Union did over the course of several decades, there were kind of rules of engagement, things we would argue about, things we would not argue about, that we haven't really set forth with the Chinese government yet. Unfortunately, it's not clear from the current incoming administration what kind of a relationship they want. I mean, it appears to be very confrontational, and yet there's this personal wooing of Xi Jinping that President-elect Trump seems to continue to pursue. So I'm not sure what they have in mind. As a country, we're still in the stage of really wanting to kind of wrap the Chinese on the nose with a newspaper and hoping they'll change their ways. What we really need to accept is that they're going to have a big part to play in our new global system, and we have to figure out ways to work with that.
We've got to get you back on. Christopher Smart, it's been way too long. Thank you so much for joining this special edition of Bloomberg Surveillance today. With arborist Christopher Smart, and I promise we'll get him on the early, if he gets up, we'll get Christopher Smart on earlier as well. Right now, the confirmation hearings continue with Dan Sullivan of Alaska, the Republican from Alaska. I guess we're waiting for Senator Warren, and that will be a bit in a while.
Yeah, I think suffice to say that might even happen after lunch as we kind of watch this proceed. But it's been, aside from the fireworks at the top, which we talked about, the protest that we saw there in the hearing room in the Dirksen building, this has run rather smoothly and without moments of dramatic punctuation. We thought there'd be some, and we really haven't had.
Red on the screen here, Marcus, pulling back a little bit. Somebody said to me, how was the recent trip to Paris? I mean, the Gulfstream was great, but I said it was the best trip I've ever had to Europe. And they said, well, why? And I said, because we have Charlie Pellet, our Europe on $5 a day correspondent, giving me wisdom. He's like giving me wisdom nonstop here on what to do in Europe. And we'll talk about it in a minute. Right now, though, with the Dow -20, with our news in New York City, Charlie Pellet.
All right, I thank you very much, Tom Keene. And indeed, stocks lower since our last update. The Dow, the S&P, NASDAQ now all in the red. Russell 2000 index, though, holding on to a gain. That index of small cap shares up by 0.4%. Bottom line, earlier gains have evaporated with the S&P now down 10, drop there of 0.2%. Dow Industrials down 18, a decline of less than 0.1%. NASDAQ down 44 points, a decline for NASDAQ of 0.2%. 10-year 4.78%. We have got the 2-year yielding 4.36%. Gold up 0.3%, 26.72 the ounce. West Texas Intermediate crude down 1.6%, 77.52 a barrel. There was positive news this morning on inflation, and with that story, here's Bloomberg's Vinny Del Giudice.
The producer price index moderated in December, posting a less than forecast monthly increase of 0.2%. A key mover, wholesale food costs. They declined. Inflation turned stubborn in late 2024 after months of improvement, and the Federal Reserve has signaled that it will bide its time on further interest rate cuts. Today's report sets the stage for Wednesday's consumer price index. Vinny Del Giudice, Bloomberg Radio.
And of course, that number drops 8:30 a.m. Wall Street time. Complete coverage on surveillance. Starbucks says it will give catastrophe pay to workers affected by the fires raging in Los Angeles. Hot, dry winds continue to pummel the region. And Southwest Airlines pausing hiring for management, headquarters jobs, and outside workers in a new round of cost cuts. And that is a Bloomberg Business Flash.
Charlie Pellet, thanks so much. David Gurr, we saw the cost cuts from Facebook, Meta today as well. I wonder what we're going to see in the earnings season and the conference calls from the big banks.
Yeah, they start in earnest tomorrow. We had Sonali Basak on now, it seems like hours ago here on Bloomberg Surveillance, talking about the environment that banks have been in here and the optimism that seems to be pervading a lot of the big banks here on Wall Street.
The decorum within our culture war is witnessed by the Hegseth hearings. We saw that earlier as the chairman from Mississippi tried to maintain calm, not one, not two, but three protests, is a long way from Dwight David Eisenhower, who had a certain decorum, perhaps in a quieter time. In that era started the Center for the Study of the Presidency and Congress And joining us now, Bloomberg Politics contributor Jeannie Shaheen Zaino, Senior Democracy Fellow at Dwight Eisenhower's Center for the Study of the Presidency. Jeannie, where did our decorum go?
You're making me long for those days. You know, it's gone out the window, and you guys are just talking about tech and where we go. I think that the birth of social media has a lot to do with it because, of course, these protesters, like we saw today with Hegseth's nomination, they benefit from this kind of, you know, outburst that's captured on social media and then shared. So I do long for those days.
I want to ask you to react to what we've seen in terms of Democratic response to this nomination as this hearing has unfolded. And it strikes me it was done in a pretty targeted way. You had Jeanne Shaheen of New Hampshire, Kirsten Gillibrand focusing on women in combat, Richard Blumenthal bringing up comments that the nominee had made in the past. Then, of course, we had Joni Ernst, who is widely expected to talk a lot more about sexual assault, and she did touch upon it in the past. Of course, she's a Republican, not a Democrat. But what do you make of the way that this has unfolded? How much strategy has been applied here to the questioning on both sides of the aisle?
Yeah, I mean, they're both trying to get their points out, and I'm particularly watching the Democrats because this is new terrain for them. They don't want to make the mistakes they made confronting Donald Trump, 1.0 in 2016, 2017. They want to be more strategic and targeted in terms of how they take him on. And I think they're trying to get there today. We still, as you mentioned, are waiting for Elizabeth Warren, and that should be particularly tough. But I think their focus has been right. It's been on the issue of, is Pete Hegseth able to manage an organization this big with this much, given how he mismanaged, in their view, the two nonprofits, and then, of course, the comments on women and LGBTQ.
Okay, but fine, they're in the minority, okay? The fact is, David Gura is waiting to see what the senator from Iowa, the Republican, did. You listened to Joni Ernst. What did the senator from Iowa say that was detrimental to the nominee?
She didn't say anything I thought particularly detrimental. I did listen to her exchange, and what she said was she asked him to confirm what they talked about apparently in their private meetings, which is that he is not going to take steps to take women out of combat. She also expressed her real concern as the chair of the DOJ caucus on financial mismanagement in the DOD and asked for his support. And he mentioned that he published an editorial on this. And, so it was not particularly damaging from Joni Ernst's side. And I should mention, you've got a lot of organizations on the conservative side who are threatening people like Joni Ernst and Republicans that if they don't go along with Pete Hegseth, they will face some pushback when they go to run again and with their nominations in the primaries. So they have a lot on the line here for people like Joni Ernst.
Jeannie, a question about balance of power and the might that the U.S. Senate has today. Of course, Republicans in the majority there, but we were talking just a moment ago about the management undertaking that this nominee would face should he be confirmed. I have to imagine that not too many years ago, if someone was put forward with this resume, yes, who led a platoon, and I'm not making any slight at that, but had such a checkered history running the two nonprofits that he did, neither of which was anything close in size to the size of the Pentagon, there would be a number of senators on the side of that president who might raise an eyebrow at least at that nomination. That is not happening here. That has not happened here. And I wonder what that tells you about this president-elect's ability to play politics and galvanize members of the Republican Party as he tries to push forward his agenda.
Yeah, it says that this is Donald Trump's party, that he has the power to set off these forces like these organizations I just mentioned, Heritage Foundation and others, to threaten Republicans in Congress that they will face a primary challenge if they go against his nominees. And I think we should be clear historically. I just look back at this number. Since George Bush Sr., only 13 people have not been confirmed nominated by presidents, and only one of those was rejected. Historically, if you make it as far as a hearing, you will be confirmed. And so I think you have Republicans also looking at the history here. They want to give the president his team. But you're right. I mean, this is not a record we would ever see as somebody, I think, 20 years ago leading the DOD. And he would be the youngest, by the way, since 1947.
Jane, is one final question. Is it feasible to run the Pentagon from the White House? As many would say, many different presidents have run the State Department from the White House.
It's feasible. It is not advised, and this is a real challenge. And so I think in this Trump Washington D.C., that's what we would expect to see, that he's going to be trying to have his hands in all of that, and that includes the DOD. It is not advised.
Gene, thanks so much. Gene Sheen Zano with us here for the Center on the Study of the Presidency and Congress. David Gura and Tom Keene, a special edition of Bloomberg Surveillance right now. Mr. Kane, I mean, he's, you look up at the TV screen and you see Mr. Kane.
Easily
identifiable.
It's Mr. Kane. Yes, you do. No doubt about it.
On that, we're going to take a break here, and then we're going to come back with some final thoughts in this hour. I've got to go look at the market, David, and there's been some there's some reversals here in that yields are higher and the equity market was green, and it's given way here with a little bit of trepidation, I should say.
Yeah, we've talked about this all morning, but a particularly busy Tuesday here in New York, in Washington, and Los Angeles as well. We've tried to keep tabs on all of it. And of course, the data that we got this morning, the PPI data, inflation data, coming in softer than I think a lot of folks expected here on Wall Street. And we look ahead to the data that we're going to get tomorrow, CPI data, as we continue to look at the role of this Federal Reserve, see what the Federal Reserve is trying to do here in terms of recharting a path forward in light of the data that we've seen in inflation and the labor market as well, Tom.
Well, with the CPI tomorrow, but also, and we've underplayed it like I've never underplayed it, earnings. I think we've got, 8 of the top 6 banks reporting tomorrow. There's going to line up, I believe there's 4. Bank of America, I believe, is on Thursday with Morgan Stanley. But the answer is we dive into the earnings season, and Gino Martin Adams, among others, Ed Yardeni with these bullish calls, John Stolfus with a bullish call, have said it's absolutely key to get some form of sprightly earnings off. That begins tomorrow, and we'll do that on Bloomberg Surveillance. I think we're back to our programming tomorrow.
Regularly scheduled programming.
Regularly scheduled programming tomorrow. Across the nation, past the morning commute, we say good morning on Apple CarPlay, Android Auto. Good morning, 99.1 FM in Washington, 92.9 FM in Boston. Thank you so much for the New England support, and Bloomberg 1130 in New York. We are on YouTube. It is a new distribution. Subscribe to Bloomberg Podcasts out on YouTube. We continue the Dow -73. David Gura and Tom Keene, good morning. Bloomberg Surveillance.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Hey, good morning, everyone. David Gurry in for Paul Sweeney. For our listeners in the United States, a reminder, you can listen to us via satellite radio on SiriusXM Channel 121, access the world's only global audio business network. We do that coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM Channel 121, always presented by Oracle. Stay tuned for the latest market news and industry research the next hour of Bloomberg Surveillance. Well, it's going to be Joe Matthew and Kaylee Lines, and it will begin right now. We thank Oracle for their support. Greatly appreciate that today. We've got a couple minutes here, and my head is spinning over, should we do CPI tomorrow? Should we do further congressional hearings? And I think, David, you know, we can talk about the investment news and the layoffs announced at Meta, the right sizing, if you will. I think we've got to go about what did we learn in these 2.5 hours as we go to the FBI designate, RFK designate. Gabbard came up twice, I think, here. What did we learn in these 2.5 hours about the days forward?
Well, we've seen laid bare the schism between these two parties and the degree to which Republicans have lined up behind their president-elect here just days before his inauguration. And I think that's going to be what carries through here. I mean, what made this hearing so fascinating, indeed, what makes it so fascinating, it isn't over yet. We still have several senators left to ask questions of Pete Hegseth.
Senator Warren.
Senator Warren, chief among them, of course, senior senator from Massachusetts, who no doubt will ask some pointed questions of this nominee, is Republicans have swallowed whatever hesitations they've had and are backing Mr. Hegseth as he goes forward here in the nomination process. And then I think we've seen a very calculated, nuanced way that the Democrats have approached their questions of the nominee. Look, we knew what the criticisms of him were going into this. What he said about women in combat, these allegations of sexual assault, the way that he's run these veterans organizations. And one by one, we've seen each Democratic senator sort of focus on a specific facet of his biography. I think that will happen going forward here. But again, I think that the message is clear. These nominees are getting through, Tom.
But the difference is, David Gurry, you don't do the Fed decides. And when the Fed announcement comes out, we're always like, who's going to dissent? That's decided at the Eccles building in the back room where they have one token dissenter, rare, two, much more fractious over in the United Kingdom. Would you suggest Republican senators have teamed up together and said, we can't go no, yes, no. So they've cherry-picked one, or dare I say two, of these nominees to go after?
I will be very curious as we make our way through this if any Republicans dissent on these nominations. And you bring up the Fed, and it's maybe a better example than you might think because dissents have been so rare, as you say. I mean, again, we've had one here, but after a very long period of unanimous backing of the Fed's decision. I think maybe there hasn't been an explicit conversation here among Republican senators about the path forward, but each of them knows, based on what they've seen and what they've been told by the president-elect and his political team, that if they don't back these nominees, there are going to be consequences to that. And these are political consequences, and we've talked about them with Steve Dennis and Joe Matthew and others.
Right.
There are more right-leaning members of this party very eager to run against them, and you have a political apparatus helmed by this president-elect who is more than eager to put those alternatives in place if people veer off course.
How lame duck is Donald Trump? People keep coming up with every Congress type has to get reelected in less than 24 months. Ernst has an election, I believe, in 26 of Iowa. How lame duck is this president to really change the outcome for the elected officials in Congress?
Of course, on paper he is. He can't run for re-election.
On paper he is.
Paper he
That's
is.
the heart of the
but in
matter.
actuality, we have seen how fully he has embraced the mandate that he thinks he has, coming into this job, having lost the election the last time, feeling like there is a lot of wind at his back pushing him forward here. He's not approaching this job as a lame duck. If anything, he's kind of unbridled, and I think we're going to see that in his approach to a lot of the policy proposals he's put forward here, be that with trade, be that with changing the Pentagon, be that with changing the State Department and its outlook on foreign policy. I think that he feels like he has a new, fresh kind of mandate here, and you look at what these senators have said over the course of the day, they seem very willing to stand behind him and push some more wind at his back
Is your
here as he moves
experience
forward.
the institutions can push back?
That has been the case historically, but I think that there is widespread fatigue in many corners of this country, and I think that there is, as I've heard anecdotally, some fatigue within these agencies as well. And
in the Pentagon and the others.
yes, and I think that there are those who are fiercely apolitical, very respectful of those institutions, but we have seen threats here in broad contours on multiple fronts here facing those agencies.
Can the president-elect take credit for the Washington Commanders finally moving on in the NFL playoffs? You know he's going to.
We haven't seen him do that yet. As we continue to monitor the Truth Social feed and the X feed, he has not taken credit for that. But yeah, we'll see if he shows up there at FedEx Field to watch a game.
For those of you at 99.1 FM, we are glued to that. Michael Barr leading our coverage is, I believe they take on the Detroit Lions.
He's resting up before the next round of all this. I know.
He's troubled. I mean, has this been fun?
It's been great fun. It's been an ultra marathon. It's the full Sweeney. It's the 5 hours that I do rarely, and a credit to our vacationing colleague here. I mean, this is real work, but a real pleasure being with you, Tom.
Sparta just emailed me and said, "Can you guys go to 3 p.m. tomorrow?" And I said, "I don't."
Send him my agent's email. And we'll see. We'll make
too much surveillance is what we would call that. We need to say thank you to our team. I'm gasping.
You doing all right over there?
I need a break.
Okay.
We need to say thank you to our team with a great set of conversations today with this terrific news flow. I really want to say thank you to Sri Natarajan of Bloomberg News, who on very short notice came over and gave us wonderful perspective of management changes at J.P. Morgan. They will report earnings tomorrow. We'll have complete coverage of J.P. Morgan and the other banks. We'll do that worldwide and on YouTube. Again, subscribe to Bloomberg Podcasts. From New York City, this is Bloomberg Radio. Joe Matthew, Kaylee Lyons, next.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. He's denied accusations of sexual misconduct. He said women don't belong in combat. Now, Pete Hegseth, the Trump pick for defense secretary, is before a Senate committee considering his confirmation. CBS's Cammie McCormick.
Republican Senator Roger Wicker admitted Trump's choice of Hegseth is unconventional.
That may be what makes Mr. Hegseth an excellent choice.
Ranking member Jack Reed.
I have voted in favor of all your predecessors, including those in the first Trump administration. Unfortunately, you lack the character and composure and competence to hold the position of Secretary of Defense.
Hegseth said Trump is seeking an agent of change.
We've repeatedly placed people atop the Pentagon with supposedly the right credentials. And where has it gotten us?
It's a tense time in Southern California as the forecast worsens and the fire danger grows.
The worst winds are predicted today for the late afternoon and into Wednesday.
LA County Fire Chief Anthony Maroney, some of those gusts could hit hurricane strength. The big fires that began last week are blamed for at least 24 deaths and the loss of more than 12,000 homes and businesses. On social media, President-elect Trump proclaims his innocence and blasts former special counsel Jack Smith. CBS's Nancy Cordes says the volley came hours after the Justice Department released a portion of Smith's report on efforts to overturn the 2020 election.
Smith, who just resigned on Friday, sent a letter accompanying this report defending his decision to pursue charges against Trump. He writes, quote, "The admissible evidence was sufficient to obtain and sustain a conviction at trial."
Inching closer, it seems, to a ceasefire deal in Gaza.
That's protesters forming a human chain outside of Israel's parliament, demanding the release of all hostages being held in Gaza. Arab, U.S., and Israeli officials tell CBS News a draft deal for such a release has been reached in principle. Israel's Deputy Foreign Minister Sharon Haskell.
I hope we will witness progress in the very near future, and especially today.
Allison Keyes, CBS News.
Well, correspondent Vicky Barker tells us now there's breaking health news about Britain's Princess Kate.
In a statement released on social media shortly after paying a thank you visit to the London hospital where she was treated, Catherine says her cancer is in remission. Writing, "The care and advice both she and husband Prince William have received," quote, "has been exceptional."
And on Wall Street, right now the Dow is down 116 points. The S&P 500 down 27. This is CBS News. A New York City homeowner wants to keep TV fans off his famous front steps.
The owner of a brownstone in Greenwich Village, whose exterior was used as Carrie Bradshaw's townhouse rental in HBO's Sex and the City, is asking permission to put up a gate to keep people off the stoop. The New York Times says a letter to the City Landmarks Preservation Commission contends 66 Perry Streets become a global tourist destination with a never-ending stream of visitors at all hours of the day and night. Deborah Rodriguez, CBS News, New York.
Starbucks is posting a new code of conduct for its company-owned stores, and it will now require people to make a purchase to hang out or work at a table or use the restroom. An open-door policy had been in place since 2018 when the company apologized for the arrest of two black men at a Philadelphia shop who had gone there for a meeting. I'm Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The hearings begin. Welcome to the fastest show in politics as Pete Hegseth becomes the first of Donald Trump's cabinet nominees to face a confirmation hearing. It is underway right now, and it's been chippy. We're going to bring you highlights and analysis coming up with the best of Bloomberg. Nick Wadhams from our national security team will be here. Mike Dorning from our politics team. And insights from our political panel today. Democratic analyst, Bloomberg politics contributor Jeannie Shanzano is with us alongside Republican strategist Ashley Davis. We've got a lot to learn here in the next hour, and it's all after a look at Wall Street. We start, as always, with the mood on the markets, and Charlie Pellet has that for us in New York. Charlie?
Hi, thank you very much, Joe Matthew. Lows of the day, the Dow, the S&P, NASDAQ, all in the red. This update brought to you by Oracle. Attention, growing businesses. Oracle is offering to cut your current